effectively by causing shortages that then influence other prices. And then we have the labor market issue. We have higher labor costs coming through the pipeline. So you've got cost push pressures coming in. I suspect we will see inflation at the CPI level get stuck at 3%. And then the Fed is going to have to make a difficult decision, either tolerate it for longer, and I was encouraged by John Williams' use of the word, a longer term inflation target is 2%, or try to reduce it to 2% too quickly and risk the real economy. But this notion that immaculate disinflation is going to continue is something that I find very hard to reconcile with actual data.
Mohammed, you really challenge that theory. I think that we get a lot of people on this program, and I know you tune in and you've heard them say it, that the economy is rebalancing, this will continue, just give it time, we'll get there. You push back against that. I hear other people say things haven't changed. We will go back to the pre-2020 economic regime, low and stable inflation, growth in at around 2%. You really believe something has changed? What are the issues that you can point to, Mohammed, that you think have fundamentally changed since the pandemic?
So I think it has fundamentally changed since what was before the pandemic. Coming out of the global financial crisis, we had major balance sheet damage, and that resulted in a decade of insufficient aggregate demand. There simply wasn't enough demand in the system. And when there isn't enough demand in the system, you pump in liquidity from the monetary side, from the fiscal side, and you don't have to worry about inflation. You boost up asset prices, and you get some growth response, but nothing really exciting. That was the story before the pandemic. Coming out of the pandemic, in addition to the pandemic disruptions, we have 4 factors that are leading to insufficient aggregate supply. So it's a fundamental change in the macro environment. So what are those factors? We have fragmenting globalization,
여러분,
which means
갑자기
that supply chains are
이런
starting to be
중요한
determined by
타이밍에
geopolitical and not just
인터넷이
commercial
꺼졌어요.
reason.
끊겼어요.
Companies themselves looking for more resilient balance sheets, more resilient supply chains
타이밍이
after what
딱인데.
happened in the pandemic. We have a
돈
significant
안
transition on
날려서
climate.
다행이다.
And we have the labor market also, where labor force participation has not gone up as much as all of us wish. This is a world in which we are fragile to begin with on the supply side, and then you get the occasional shock. So that is a fundamental change.
Mohammed, I'm not going to be at Davos. I'm going to be watching QPR at Watford this weekend. I'm really looking forward to that.
Mohammed's not.
But I'll be there. Mohammed, if I was in Davos, my banner for the year would be "It's cost of carry Davos." What's fundamentally changed off of your good analysis there moments ago is all of a sudden money costs something. Every single business and family out there has a new cost of money. How's our world going to change a year out with this new after the free lunch of the last decade?
Yeah, and the issue is the legacy of the free lunch. I think on a flow basis, we can deal with the higher cost of money. The problem is the stock. And
주원님, 제가 죄송해요. 갑자기 인터넷이 그 인터넷 커넥션이 끊겨가지고 그래도 다시 들어올 때 아직 수익 중이었어요. 다행이네요.
Second is commercial real estate. There's $1 trillion plus that has to be refinanced, and some of it cannot be refinanced.
그쵸. 그래서 좀 줄어들긴 했는데 아직은 조금 수익을 보는 중이라서 괜찮아요.
And companies normally try to get ahead of it. So if we can deal with the stock issue, with the legacy of this borrowing that occurred when rates were artificially low, we can deal with the flow aspect. The flow aspects, Tom, don't worry me. We just have to deal with the stock.
Mohammed, we'll continue this conversation. Do you want to tell Tom about QPR?
하루 종일 되는 일이 없는데 이거라도 잘 돼야죠.
Can the Jets be relegated? I mean,
they are like the Jets of English football in the Championship
really?
right now. Yeah,
and there's a level below them.
They can go down. a league yet. This is not looking good for QPR.
Well, you know, Mr. Rubenstein's rumored to be looking into Baltimore Orioles.
그렇죠. 다시 시동
Professor Alarian would be
봅시다.
fun.
If they get relegated, can we get some kind of consortium together and take out QPR?
Yeah, that's what get some movie
I think that
actor
would be
involved
great.
that watches us every day. That'd be
You know,
great.
Mohammed's in the
And you
UK
could do the
now.
Ted Lasso thing. You could go over and
I could
do
go
it.
and coach the team or
Coach, I
something.
could
I'm not
just
sure
see it.
anyone at QPR wants that.
대관님
I know Mohammed Alarian does.
화이팅.
Mohammed's going to stick with us, the brilliant Mohammed Alarian of Queen's College, Cambridge, to round out the week, TK. To round out this morning as well. So PPI comes in a bit better than expected. Equities almost unchanged on the session. In the bond market, Tom, yields are a little bit lower at the front end. We're down 5 basis points on a 2-year.
Man, Boeing struggling as well. Another story tangential after the huge bank earnings report today.
From New York City this morning, good morning.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something
오케이,
ourselves?
일단은
Some teams
아직
are doing like local TV and streaming. How do you see that shaking out?
좀 차트가 좀 내려가고 있긴 하지만 아직은 선익을 보는 중이라서 괜찮아요. 할 수 있어요. 버틸 수 있어요.
And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it?
Peacock, yeah.
And that was really smart too because they were able to leverage that number as high as possible. So they always zagged where the money was when the opportunity was. I think the opportunity for the NBA with the local
이거 아니다.
teams
좀 많이 내려가네.
to own all that themselves.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Horder and Joe Matthew
많이 내려가네.
Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes
그리고
everything.
다시 올라가야지. 올라올 수 있겠지? 제발.
When you go back in modern financial history, there's only been one quote-unquote soft landing. And part of our concern right now is that unlike this time last year when everyone thought recession was imminent, no one thinks recession is imminent. And when you think about that kind of drawdown, the average non-recession year drawdown is 13%.
That was Julian Emmanuel of Evercore looking potentially for a rocky path ahead in 2024. The team led by Ed Hyman looking for recession, I believe, in the middle of this year. If you are just joining us, equity futures just about unchanged on the S&P 500, going into the opening bell about 44 minutes away. Yields are a little bit higher on a 10-year maturity, but at the front end of the curve on a 2-year,
이제 선물의 금리 인하가 인상이 높아졌어. 그래서요. 그렇구나. 그러니까 이렇게 좀 내려가고 있나?
Bank earnings a little bit early this morning. Allow me to go through just one of them for you. JP Morgan earnings at this morning, TK, but it's all about the outlook from that bank.
기다려야죠.
Better than expected, and the stock turned higher off the back of that information.
주원 씨 이제 아시죠? 제 방법은 일단 하고 나서 안 보는 거예요. 저는 이렇게 혼낸 거 좀 괴로워요. 물론 손익을 낼 때 좀 재밌죠. 스릴하고 기분이 좋아지긴 하는데 그 반면에 내려가면 저는 못 봐요.
We're going to have to see. We continue with Mohammed Alarian. And John, this is just wonderful after the accolade he has received from Dubai. and an award given to him for all of his commitment to the Arab world and to economics as well. Dr. Al-Arian's father, the former Egyptian ambassador to France a few years ago. And I guess I could start with Dr. Al-Arian. I know what
저도
Dubai
왜
was like the first time I was there,
수익을 버는
Mohammed,
건
and the growth just
저는
since
거
I've been
나도
there
좀
is
신기해요.
extraordinary. What was Dubai like the first time you were there?
오히려
So
제가
that's gonna
사실
expose my age.
보시다시피 여기 레버리지 1대 20으로 해놨어요. 그러니까 저는 사실 그렇게 욕심이 별로 없어요. 여기 1대 20으로 하면 찌까지 1,000원밖에 없어요. 1,000원밖에 안 돼가지고 그러니까 이렇게 조금씩 먹는 것도 사실 방법이겠죠? 저는 큰 욕심이 있었으면 그 레버리지 뭐 1대 50, 1대 5 이렇게 해놨을 텐데 일단 제가 아는 게 별로 없어서 저는 약간 아직 그런 좀 이렇게 그런 편이에요. 아, 오늘 중요한 발표 있구나. 그리고 그 이후로는 그냥 감으로 아, 오늘 왠지 발표 내용이 안 좋게 나올 것 같다라고 하면 오케이, 매도합시다. 근데 오늘 느낌이 좀 괜찮은데? 그때 바로 매수 해버리고요. 오늘은 좀 감이 괜찮은 편이었나 보다. 그러니까 계속 조금 올라가고 있는데 뭐 아무튼 지금 매수 포지션을 계속 잡고 있고 일단 좀 유지해보려고요. 유지해보고 계속 손익을 봐야죠.
Mohammed, this was Tom's way of saying congratulations.
뭐 그렇긴 하죠. 사실 1대 1로 해버렸으면 완전 큰 수익을 볼 수 있었으면 하는데 근데 그만큼 큰 손해 볼 수 있다는 거죠. 이것도 사실 기억해야 되죠. 큰 욕심을 부리면 절대 안 돼요.
A crisis. Just how resilient is this system, and how well do you think it's standing up to this aggressive rate hiking cycle that started not so long ago?
I think if you look at it as a system, it's highly resilient. And if you look at JP Morgan's results today, it'll show you how resilient.
그쵸. 반대면 그냥 죽는 거죠.
Really impressive what that bank keeps on delivering quarter after quarter. The system as a whole is very resilient. There are some banks that are fragile. They make mistakes, and if it wasn't for the fact that we de facto changed deposit insurance in March of last year, we would have a few more of the mid-sized banks come under pressure. But the change in deposit insurance has made it possible to contain the crisis. But the system as a whole is strong. I don't worry about the banks. I worry about the non-banks. But the banks, I think, are strong.
I look, Mohammed, at the core economic course at your University of Cambridge, and you got to go in there and give some central bank theory. I can see Dr. Al-Arian wandered in with a chalk in a hand, saying, "Okay."
조원 씨는 아직 그런 생각하세요? 인생 한 번이죠. 어우, 역시 무인시네요.
We have a theory of central banks. I think reaction functions have become ad hoc. You know, the phrase you hear most often is data dependent, which is quite curious because everybody acknowledges that the measures act with lags. So the fact that you are operating with measures with lags based on historical data is a little bit strange. But what you see lacking, which is very different from the Bernanke Fed, it's very different from the Yellen Fed, certainly from the Greenspan Fed, is a vision of where this whole thing is going. the Fed today is very short term and just keeps on repeating data dependent, data
보니까
dependent.
조금 지금 조금 올라가긴 하는데 이 선택까지는 안 올라갈 것 같아요. 나스닥이 맞지? 나스닥은
Is that how much they are? How much they are? Mohammed, let's finish on Fed policy. Expectations they go in March. What's your gauge of what the threshold is to begin to reduce interest rates and how close do you think we are
파생
to it?
상품은
There's no reason that
강심하는 사람들은 강심지 않은 사람들은 아니면 타보, 제가 된 타보, 아무것도 모르는 바보, 감을 조금 있는 바보.
Mohammed, appreciate the update and congratulations on the award. Thank you, sir. It's good to hear from you. Mohammed Al-Arian of Queen's College, Cambridge, TK and the Federal Reserve. March is too early.
Yeah, the operative theory here is interesting. And, I'd go back to that phrase I was saying about Davos, cost to carry for everybody, including Jerome Powell.
제가 맨날 이 소리 하긴 하는데 해외선물 시장은 예측하기가 너무 어려워요. 큰 이슈나 큰 발표가 없는 이상 저는 잘 몰라요. 그때는 그냥 뭐 카지노죠. 그때는 그냥 로또죠. 감으로 가는 거예요.
What are you looking for next week from Morgan Stanley, from Goldman?
It's going to be really interesting to see how Morgan Stanley develops a dialogue post James Gorman. That's the number one thing I'm looking at. Within it is they are not traditional banks. And Mr. Solomon has learned this the hard way, having to pick up the pieces there of their banking experiment. But what I would look for them next week is a different story than what we heard today. Today was maybe what we
그쵸, 맞아요. 그 예측보다는 대응이죠. 맞아요.
Each have their own challenges, to say the least.
Do you want to start the weekend early? That's special.
Start the weekend early. We're off Monday.
We are, long weekend.
You're traveling. I didn't know until yesterday that we're off Monday.
We're off Monday, long weekend.
We're off Monday, and we're going to digest it all and see what goes on here. I think the one thing we haven't mentioned today, because John and I don't believe in it, is Bitcoin. And the answer is it popped up.
Hey, don't drag me into that list.
49,000. I loaded the boat at 49,000 looking for that 50K print. Oops, right back down.
Equity futures. Let's turn to stocks. Don't put me on that list with you. I don't want anything to do with it. On the S&P 500, totally unchanged. Equities going absolutely nowhere. Yields are unchanged on a 10-year also. 396.72 at the front end of the curve. We've got to move though. Down another 5 basis points. It's a break at 420. It's 419 as PPI comes in. A little bit softer than expected. TK, do me the honor. Take us out to break.
No, the real yield here. I mean, folks, you look at the real yield, 1.71%. Really, really extraordinary to see that. A break of 170 there is a huge deal. And I would suggest the real yield is technically very elegant right now. That's the number one thing I would watch into next week. Good morning.
손익을 10으로 넘어갔으면 좋겠네요.
Economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase?
나오는 결과를 보고 확률을 좁혀야 되는 게임 같아요. 그쵸? 저도 가끔 이런 생각해요. 이거 이런 거는 공부는 뭐 물론 공부할 수 있죠. 공부할 수 있는데 그래도 조금 이렇게 생각해요. 그 공부해왔던 사람보다는 아무것도 모르는 사람들이 이런 분야에 있어서 조금 운이 좀 있는 것 같아요.
So it is a massive, significant challenge that we are confronting, and my fear is that we may succeed
뇌동맥매. 뇌동맥매. 괜찮은데요? 뇌동맥매 게임.
for trade liberalization and investment liberalization in Africa.
너무 좋은데요?
But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
그쵸. 우리 같은 사람은 되게 탄수화니까. 그리고 그쵸. 여기는 그냥 탄수하게 생각하면 돼요. 올라갔네? 그럼 내려가야지. 좀 내려갔지. 그럼 또 올라가네? 그럼 또 내려가겠지? 왜냐면 그래프는 쭉 올라가면 안 되잖아요. 뭐 물론 아마 비슷한 경험이 좀 있을 수도 있는데, 이런 약간 포비보다는 뭐 이런 거 있잖아요. 그러니까 그냥 단순하게 생각하면 돼. 아마 내려가겠지? 아마 올라가겠지? 아우 10만원 좀 오케이. 지금 뭐야. 지금 뭐 하자는 거야. 올라가야지. 전 복잡한 거 딱 싫어요. 제 인생에 있어서 복잡한 일이 엄청 많기 때문에 이거라도 좀 단순하게 생각하고 싶어요. 다 이렇게 너무 복잡하게 생각하면 사람 그냥 죽어요. 터져요. 좀 편하게 살아야죠.
Coming up this Friday, wrapping up a volatile week with more inflation data. Earnings take center stage. The bank results, they begin to roll in. And oil tops $80 a barrel after airstrikes against Houthi rebels in Yemen. We begin with a big issue. Guess what? Earnings season.
We have big bank earnings. Those banks' earnings.
There's a fairly high bar. The banking industry in the United States is doing extremely well. The banks have had a very big move, 30% plus in the last 6 weeks.
And we're talking about 85% of financials are in an uptrend.
Are the sort of strong numbers that we've seen in terms of performance going to hold up? The fourth quarter earnings are not really going to be as much in focus as what people say and what companies say on those fourth quarter earnings about 2024.
The key theme of earnings for 2024 at large is
오케이, 일단은 10만 원 넘어갔어. 넘어갔어. 죄송해요. 제가 오늘 너무 피곤해가지고 말이 좀 꼬일 수도 있어요. 오늘은 그냥 이렇게 편하게 수익을 낸다는 거 이렇게 보고 싶어요.
Join me now to break down the earnings and the sentiment. JP Morgan's Priya Misra and Jay Pawlowski at TPW Advisory. If I look at what Jamie Dimon has told us, the US consumer remains strong. They are spending. They continue to be resilient. So I'm bid up on Jamie Dimon, and yet we have the PPI numbers coming down. This equity market doesn't believe the disinflation narrative. Let's start the conversation with the sentiment from the bank CEO, Jay Pawlowski. Jamie Dimon, I believe him every time. The US economy continues to be strong. Consumers are still spending, and the markets expect a soft landing. What does that do for you? Good morning.
Yes, good morning, and happy Friday. Jamie Dimon has said many things over the years. Sometimes he's right, sometimes he's wrong. Guess what? It's the markets. We're constructive on things. We think the market is strong. A number of sectors are breaking out to all-time highs. The thing that really struck me after being on vacation the last couple of weeks and coming back this week is NVIDIA. And I know this is not a bank, but just bear with me real quick. So NVIDIA is the poster child for the AI.
아, 그러네요. 오늘은 금요일이죠. 아하. 그럼 오늘은 더욱 수익을 봐야죠. 수익을 보면 그럼 내일은 네, 진짜 따뜻한 주말 보낼 수 있을 것 같아요. 마음이 편한 근데 선율을 보면 이틀 동안 진짜 괴로울 것 같아요. 음악이 지금도 안 나와요?
What's the spoiler alert here? Because you ultimately see a hard landing, and that's not what I'm seeing in the commentary that's coming through. Citigroup have got their own domestic issues to play with. Wells Fargo needs to cut costs. But when it comes to the US economy, you know, you're still seeing a strength there in the consumer. Delinquencies are rising, so you go for hard landing. Why?
Sure. So I would say, you know, right now we're very much in a soft landing. The consumer is resilient, and I think the Fed is trying very hard to keep that soft landing continue. So all this talk around perhaps the end or slowing of QT for the Fed to start to cut rates, they're trying very hard to get that soft landing.
뉴스도 나오네요. 이게 나스닥 해외선물도 지금 쭉 올라가고 있어요.
Now, I think March is a little too soon, and I think the reason why the market's a little wobbly is number one, we had a really strong
15만 원. 너무 좋은데요.
outperformance across asset classes. Some of this is we need more data. Some of it is nervousness around how quickly will the Fed start to cut.
오케이, 일단은 롱으로 갑시다. 좀 기다려야죠. 쭉 기다려보죠. 제가 어제 중간에 뺐거든요. 하고 그 롱으로 가려고 했는데 중간에 나갔어요. 근데 치려고 나가는데 중간 돌아왔는데 너무 차트가 너무 애매해가지고 그냥 멈췄어요. 그냥 오늘은 안 했고 내일 다시 해보자라고 생각했고 그러니까 역시는 잘 선택했어요. 오늘은 좀 돈이 좀 들어오네요. 아이고 성의를 보셨어요 주원씨는. 아이고 어떡해요. 근데 죄송해요. 쟤는 좀 완전 찌라서 공감하지 못해요. 고생 많으셨네요. 아마도 마음고생.
Yeah, well, it is a little complicated in that we saw
잠깐만.
some revisions to the prior month, November, that
수익을 15만 원이었는데 좀 떨어지네. 그래도 아직은 수익을 보는 중이라서 오케이. 그럼 주원 씨는 지금 뇌동매매 게임을 실패했습니다. 다음 기회에 다시 해보세요.
The margins have fallen tremendously over the last month because I guess prices have been going down and you're not being able to pad your margins with higher prices. So that tells you something maybe about what we might see from retailers during the earnings season. Now, if you're looking at what's happening with the banks as we are today, we could call this the PPI for the banks. The reaction to all of this is that now we have about an 80% chance of a Fed rate cut in March, despite what Loretta Mester and others are saying. So the cost of money is going to go down.
어떻게 잠깐만. 내려가면 안 돼.
PPI and CPI, the ongoing question is, does PPI lead CPI? Not usually, but right now it's been falling faster than CPI, so that does increase the optimism about it. And the interesting thing is a number of components of PPI go into the PCE, which is, of course, the Fed's target.
그래도
And according to analysts so far this morning who have taken apart this PPI,
기분이
it's likely to get
아직은
a sub 3%
제 기분이 어디 있어요? 제 기분이 여기 있어요.
That will be the first time since the pandemic. That'll get people's attention.
That certainly will. Interesting on those margins. Let's take that straight to Jay. Jay, I wrap up the consumer. Jamie Dimon tells me
아, 주원 씨, 지금 혹시 음악이 나오나요? 저 지금 확인을 못 해가지고 혹시 안 나오면 제가 다시 한번 문제를 찾아봐야죠. 해결할 방법을 알아봐야죠.
Quite low on a personal income basis, and so we think the consumer is fine. We have record low unemployment, and that's not really a concern for us. So when we look at things, we're really focused on not when the Fed will cut, but why it will cut. History shows very clearly if the Fed is cutting because real rates are high and there's room to cut, and that's where we are today, that is bullish for stocks. If the Fed is cutting because recession is imminent, that's bearish for stocks. Fourth quarter GDP, according to the latest Atlanta Nowcast, suggests growth of about 2.5%. Consensus for GDP for this coming year, for 2024 in the U.S., is about 1%. The bar is quite low. And the real important data point for us is that earnings expectations are double digit, not only for 2024, but for 2025. And so when we think about the market,
오, 많이 내려가네. 아이고. 저기요. 교수님들. 이거 아니다. 아니다. 음악이 작게 들리는. 오케이, 잠시만. 맞아요. 오늘은 좀 클럽 분위기예요.
The type and quality and timing of rate cuts is going to matter. It's either disinflationary narrative that continues, and that gives me constructive, mellifluous rate cuts, or it's a recession and a hard landing on the way, as you suggest, which might mean chunkier, back-ended rate cuts. Is that the camp you're in, which is chunkier, back-ended rate cuts?
매도로 해버렸으면 지금 완전 엄청 많이 올랐을 텐데. 야, 이거 아니다 하겠죠?
We can debate whether they start in March or they start with 25 or 50 or do they sort of start later this year. But let's look at the total amount of cuts that's priced in. The market's pricing in the end point after all the rate cuts of 3.25. I would argue that's high even in a soft landing scenario. In a soft landing scenario, the Fed thinks the neutral rate is closer to 2.5. I think the Fed could cut even in a soft landing, close to 2.5 or 3%. That's actually lower than what's priced in. So I would argue that the 10-year is likely to decline even in a soft landing. Less in a soft landing. I think we end up in a 3.5% range in soft landing.
가보자고.
3% or lower. So
위로.
I know they're telling us not so fast. They've opened the door to normalization in terms of at least rate cuts here, resulting in some start of easing. That's bullish for bonds. And I think this correlation, we've all struggled with it for the last 2 years. Correlation between equities and bonds, they come back. The Fed's starting to respond, whether they're normalizing or they're actually cutting rates to easing territory. I think owning some duration here against risk assets makes a lot of sense.
In that narrative, very briefly, because I do want to square up on Japan with Jay, does that make you incrementally bullish on credit, Priya?
It does. I mean, I think credit spreads have tightened a lot. But from a carry standpoint, if you do your credit work and you're picking these high-quality companies that still have decent margins, still have decent earnings, I think it does make sense. High-quality investment-grade credit, I think does make sense.
I've got to throw to you, Jay. You're the only one that's come on the show that goes beyond borders. I've been banging on about Japan all week, 34-year high, biggest rally in 2 years. How long of Japan do you want to be? Briefly.
Yeah, we're double weight versus our benchmark, and we just extended that positioning into Japanese small caps where there's tremendous value. domestic reallocation away from bonds, which is what the retail investor in Japan has been doing for decades, to stocks, and we think there's significant upside.
그죠, 음악이 딱 맞죠. 지금의 자태에 딱 맞는 음악이에요.
Jake, thank you very much for running away there. Priya Mishra stays with me to go through more in these markets. Let's go under the hood. The opening bell is just 18 minutes away. Abigail's really the side-by-side with me. What have we got, Abby?
Well, beneath that relatively flat surface for U.S. futures, we do have some movement, starting off with the shares of Tesla. They are down right now by about 2.9%, almost 3%, on the news that they've reduced the price in the Model 3 in China by almost 6%, the Model Y SUV by about 3%. They also yesterday announced that they're shutting down their Berlin plant temporarily on the Red Sea conflict. Investors not liking it. United Health down 3.4%, although it is off the lows. Now, they beat on the surface, but a gauge of medical expenses beneath the surface was higher than expected, and it's thrown the whole health insurance group off lower. JP Morgan up 2.2%, the best-in-breed bank. Well, they beat adjusted earnings, that fixed income, commodities, currency trading up 8%, equities down 8%, into today up 22%. It seems as though that rally will continue on us.
Abby, thank you very much. Coming up on the show, U.S. launching airstrikes in Yemen.
The attack was a strike on Houthi rebels. It is a attack consistent with the administration's plans to have a gradual escalatory approach to the region.
Escalating geopolitical tensions fueled the leg higher in oil prices. That conversation next on the...
오늘 실적 발표? 그쵸? 아무래도 중요하겠죠? 근데 제가 보니까 발표는 다 좋은 거 아니에요. 어제였죠? CPI 발표였잖아요. 그쵸? 근데 시작하자마자 바로 완전 마이너스로 떨어졌잖아요. 그러니까 발표는 항상 좋은 거 아니라서 일단 이거 참고하시고 조심스럽게 하는 게 좋을 것 같아요. 그쵸. 지난번에 삼성도 그때 발표하고 나서 시장이 안 좋게 나왔죠? 완전 떨어졌죠? 지하로? 저는 반지하로 생각했는데 완전 지하로 내렸구나. 그 정도 아무튼 오케이, 오늘은 성익을 15,000원. 아직은 너무 좋네요. 아니요, 15만원 아니고 16만원이요. 일단은 지금 롱으로 계속 할게요. 계속 하고 지금 조금 그대로 하면 괜찮을 것 같아요. 일단은 저 잠깐만요. 잠깐 계세요. 저 화장실 좀 다녀올게요.
Leader is saying that imminent. The latest developments boosting oil prices. Brent topping $80 for the first time in 2024. Team coverage assembles. Katie Lyons in DC, Will Kennedy in London. Katie, it's interesting there to hear that take, which is this was a tactical strike, not a strategic escalation. But Biden makes it clear he's ready to do more.
Well, the U.S. and its allies for weeks, Manis, have been warning of consequences if the Houthis were to continue their attacks on shipping in the Red Sea, which they have. So now we have gotten a taste of what those consequences actually look like. As we say, 70 airstrikes conducted by the U.S. and UK on really infrastructure targets within Yemen, trying to impair the Houthis' ability to continue to conduct these attacks. The U.S. military says of the 16 sites in total that were hit, including airports, radar installations, and storage and launch facilities for drones and missiles. So again, going after the infrastructure here, and according to the Houthis, killing 5 fighters in the process. It really, though, is going to become a question of what happens next. We already have heard from the Houthis, as you mentioned. They have said a response is imminent after the leader of the Houthis just yesterday warned of a big response if the U.S. were to hit it militarily, if proceeds with military action. It said it will confront the American aggression, and any American attack won't go unpunished. They are also vowing to continue the attacks on commercial vessels and saying that the U.S. and UK interests are now legitimate targets. There's also other considerations here. Of course, the Houthis are backed by Iran. Could this draw Iran more directly into conflict with the U.S. is a question this morning, as Iran has condemned these airstrikes. Russia has as well. And Turkey's President Recep Tayyip Erdogan says the U.S. and the UK acted disproportionately here and could turn the Red Sea into a sea of blood. That has always been the concern, man, is that actual offensive action could escalate this conflict in the Middle East. And I guess we may be about to find out the extent to which that is true.
Yep, it certainly is. And it's reflected in oil prices to a degree this morning. Kelly, thank you very much. We're going to let me bring it to you. I mean, for the first time in a while, we've seen a big return to the oil market. It's a debate as to what level war premium is. Standard Chartered says $10, Rapid says $12 from when I spoke to Bob last week. What would you say to the price action this morning? The Saudis are uncomfortable with this level of escalation as well.
Yep, I think you've seen probably the biggest reaction to events in the Middle East that we've seen this year, and obviously making high for the years earlier this morning, and I think that reflects the real risk of escalation from here, as Kylie alluded to. I think there are two risks. Firstly, it is Houthi retaliation and then attacking a much broader range of shipping. So far, the action has been against mostly container shipping, and we've seen that have an impact on global trade. Tesla's impact was mentioned earlier. But if they start hitting oil tankers, that can have a material effect on trade. And secondly, what the ship owners do in response. We've already seen one of the world's bigger tanker owner, the Danish company called Form, say that they will avoid the region. We've seen several other tankers change course in the next few hours. So if, on top of the container industry, the tanker industry starts to avoid the area, that will mean that freight rates are higher, that oil takes longer to get to market, and it will put some upward pressure on prices. And then, of course, the final risk is that this escalates further, starts to draw in regions near the Strait of Hormuz, the Persian Gulf, and ultimately the big risk would be any disruption flows out of the Persian Gulf.
And those are the extreme escalations, aren't they, in terms of catastrophe on the risk side. Kayleigh, thank you very much. Will Kennedy. We've got 2 minutes to wrap it up. Prime Minister and my guest, Jay Pelowski. I'm looking at this through the lens of what it costs me to get a good from China to here in the United States of America or anywhere, or to the port of LA. Right now, those freight rates are belting higher. This invokes the reminiscence of COVID. Prior to you, first of all, that this bond market is just gone. Now, we're not bothered by these freight rates at the moment. That's my take. Yours?
I agree. I think the market's looking at other factors. Wage inflation is starting to slow down. Rents are coming down. So I think the market's saying this is cost push inflation. If this does pick up, the Fed will not respond because it actually helps the corporate sector as well as the households.
Jay, let me take it to you. Transit volumes are down 45% in a 4-week period. Shanghai's container freight index up 16%. Equity markets, they just, all they want is rate cuts. They're not really that bothered about freight rates, but that's ignorance, isn't it?
No, I think it's the right judgment of what's really important. Geopolitics, I actually see it as kind of a backhanded way of complementing the reality that macro factors globally are getting better. Jobs to macro stability, double-digit earnings growth, markets breaking out around the world. That's the focus, at least from TBW Advisory.
Look, 100%, I'm with you. I hope the glass remains half full, 2.5 hot wars, and a few reminiscences of COVID. Let's hope it stays fine for us all. Mr. And Jay Pawlowski keeping the light of this alive. Coming up on the show, New Morning Calls. We discuss the outlook for the earnings season. We're underway. JP Morgan, City, you've got it all there. And we're going to unpack it with UBS's Erica Najarian and Cannacord's Tony Dwyer right here on the show. Good morning.
어메 여러분, 이게 무슨 난리죠? 어머, 아 보기가 좋네요. 수익이 22만 원이라니. 아 참나. 아 참나. 오, 기분이 너무 좋네요. 기분이 좀 풀리네요. 역시 오늘은 롱리 답이었죠. 참 이거죠. 예. 좋네. 갑시다.
Next up, Mizuho upgrades Chesapeake to a buy, applauding the company's upcoming merger with Southwestern Energy. And finally, Oppenheimer raises its Netflix price target to $600.
지금 17,000으로 넘어갔네.
Earnings season is upon us. The curtain has been raised on the banks. What will UBS make of the numbers?
아, 그래서 올라갔구나. 지금 차익시장이 2분 전이라. 완전 그쵸, 완전 저렇게 빨사다 진짜. 와, 오 잠시만. 설마 오늘 수익이 30만원 고? 너무 좋네. 근데 잠시만요. 떨어질 수 있는데? 어떡하면 좋은데? 잠깐만. 30분이야. 보자. 잠깐만. 아직 몰라. 내려가네? 아니야. 내려가고 있어. 안 돼. 뺄까? 정신이 없네. 아 진짜 난리났네. 아, 야 이거 진짜 어렵다. 아 오늘 좀 그래도 롤러코스터는 아니지만 아 안돼 이러면 안돼. 아 기분이 좋았잖아. 저기요 나스닥씨 나스닥씨 올라갑시다. 30%, 32, 18. 아 긴장되네. 근데 일단 봅시다. 뭐 중요한 거 나왔나? 뉴스.
Rest of the markets is what we got for you. As yields drop, very little impact on euro dollar per se. The dollar is down generally, but not against the euro dollar. Yields do drop when they're better than expected. PPI number in the disinflation narrative remains alive. The Fed should get ahead of the curve. That is what Alfonso Papigello told us this morning. Real rates are too high. The Fed needs to cut aggressively. On the escalation of missile flights by the US and the UK into Yemen, you have got oil bid up.
안돼. 안돼. 다시 내려가네. 치워버리겠네 진짜. 뭐야 이거.
First of all, it is a sector to watch. It's the theoretical curtain raiser to earnings season. Where did I
그쵸, 힘 좀 어떻게든 내봅시다.
We do of course have JP Morgan popping higher. In fact, up more than 2%. Its best day since July of last year. So
오케이.
liking those results. The best in breed bank.
음악의 힘.
Up more than 22%.
역시.
Adjusted earnings by about 10%. Revenues, as you mentioned, or actually that was on Citi, a small miss of 39.94 billion. Big numbers. FIC up 8%, equities down 8%. Net interest income that was posted was a record. So that bank is really trading quite well. Wells Fargo down about 3%. Take a look at Bank of America down 2.1%. Its worst day. It's going back to October of last year. They beat the bottom line. The top basically in line. The bond trading activity declined as profits dropped there, a bit of a surprise. On the other hand, equities up about 12%, investors looking at the bond trading. Then finally, Citigroup up 1.9%, despite that $1 billion, greater than $1 billion revenue miss. I think not as everybody is thinking that the restructuring is going to really help turn Citigroup around.
It's going to have a real impact on 20,000 jobs to grow. This is the meat on the bone of the Fraser to turn around. Abby, thank you very much.
음악의 힘이 다 풀렸나 보다.
Tuned in. What did you glean?
A few things. You have Jamie Dimon when he had some caution in the initial release to investors. A wide range of risks on the horizon, Manus. You are seeing still say they can hold on to good returns even in
올라가자.
What's important, as we know, they had their net interest income guidance raised just a little bit here to $90 billion expected for the full year. You have JP Morgan that also raised their
네. 담보금에 300 됐으면 좋겠어요. 기대돼.
different story at these different banks. You have headcount rising over at JP Morgan as opposed to Citigroup. The question is, when do these other businesses start to turn around? It's still green shoots out there for the messy parts of these businesses today. That is investment banking.
그쵸, 돼야지.
Just sounds as if we're going to go in for a whole heck of a lot of
저기요, 아마도라니. 아마도라는 안 되죠. 될 거예요. 꼭 이렇게 해야죠.
Jamie Dimon gave us. The consumer is strong, the consumer is brave. That is the message from them. Jim Fraser detailing a little bit more. She's disappointed with where the quarter is. Wealth management needs a shake-up. And of course, it's going to mean human capital headcount reductions. Citigroup goes bid by just under 3%.
해? 없어질 수도 있어요? 저기요. 주원씨, 가세요. 가세요. 큰일 날 소리.
Gains in net income by cutting costs. That really only lasts for a period of time. Erica Najarian joins me now from UBS. Erica, even you are surprised by the net interest guidance from Jamie Dimon and the team over there. 90 billion is quite strong.
일단 지켜봐야죠.
So we were actually a little bit
봅시다.
So it's not as much as a surprise. I'll tell you it's not a surprise. It's not a surprise that once again Jamie is the one that's outperforming and delivering on the revenue expectations, even with the much more heightened,
마음이 편한 척 하고 사과를 좀 먹겠습니다. 편한 척. 잠깐만. 300 됐어. 거봐요. 됐죠. 테슬라가 더 올라가네. 테슬라는 아직은 좀 그쪽으로 안 갈 거예요. 아직은 전 나스닥 좋아요.
So if the opposite happens, clearly the opposite also happens for net interest income. Of the three banks that reported this morning, they're the only ones that haven't given a guide yet. So they typically give a guide during their call, which begins at 11 o'clock. And I think the stock performance day really hinges on what they say about net interest income. And the bogey for that is 56 billion, which is where consensus is.
And in terms of, I love how you encapsulated who bid up the bank index before Christmas. You're very good. It was the macro tourists, the macro fund tourists.
오케이, 300만 원. 이거지. 보기가 좋네. 야, 송인기 거의 30만 원이네. 역시 오늘은 별날이었어. 그치. 오늘은 이거라도 해야지.
So, we essentially are seeing, some of these banks really meeting the moment in terms of higher expectations. But if we just peel back underneath the surface, right? So in terms of net interest income, I think that you probably will not get as strong of an outcome.
오늘 애플도 올라갔어요. 아하. 그럼 이렇게 연결 다 돼 있네.
Get everybody's attention next week.
좋네.
Take a look what's happening with credit quality. We've been lulled into this, notion that we're going to get these rate cuts, these, 150 basis points of rate cuts, and this perfect soft landing economy. But if you look at JP Morgan and B of A, they had higher losses in commercial, higher than we expected. At Wells, they had higher commercial real estate losses than expected for the fourth quarter. And for Citi, they had a
저에게 100번 가셨어요? 오, 축하요. 진짜 축하요. 기분 진짜 좋겠네요.
And perhaps the revenue numbers, the operating revenue numbers are masking that today. But that's definitely going to be a very interesting and not fun read across for the banks that report next week.
No, but it's going to be much more about the investment banking flows next week. Tell me this, Mike May obviously thinks Citi can double in the next couple of years. I think it was a big splash.
아마존도 올라갔구나. 오늘 그냥 되는 날이네. 주식으로든 해외선물이든 되는 날이었구나. 좋네.
I think I just need to see a little bit more evidence.
역시 우주의 밸런스 있어야 돼요.
Is cheap, and I think it's clear that they're making progress on expenses. I guess I'm just skeptical that we're not going to trip up here a little bit because, you know, I haven't really seen a bank do this magic trick where revenues are going up and expenses are going down. And that's really what's embedded in their return expectations. And look, maybe they were so bloated and so inefficient that that can happen for Citi. But
이런
again,
소식을 봤으면 그럼 같이 해야죠. 내일 바로 가세요. 뭐 어디 클럽이든 어디 좀 가세요. 오케이, 오늘 된 날이다. 오늘의 기분이 좋네요. 신나요.
Let's get the movers. The transports this morning. What have we got tomorrow?
Well, we have Delta missing earnings expectations for the fiscal year of 2024. Even though it beat on the top and bottom line, it says that earnings per share for fiscal year 2024 are going to be
수익이 33만 원. 오, 좋네.
over $7. That's seeming to meet some concerns about pricing and potential cracks in consumer demand. That's why we're watching shares now down close to 7%, and the whole airline space is feeling this. We're also watching shares of Tesla this morning. Two big headlines out here. Tesla telling Reuters that it is going to suspend production at its only plant in Europe, a plant outside of Berlin, for 2 weeks starting later in January because of supply disruptions traffic disruptions through the Red Sea, those Houthi attacks on container ships. Volvo coming out and saying it was going to do the same for a plant in Belgium for about 3 days. And separately, Tesla cutting prices in China, but consumer demand has been the big question. All of this likely to play on profit margins. Both of these names down in early trading. Tesla shares down now 1 3/4%.
Thank you very much. I dream of being waiting diamond in South joining me now is Tony Dwyer, Canaccord, Genuity with me on the markets. I'm trapped. I'm really trapped. I've got the short end dropping. Okay, believe the disinflation narrative. And the equity market that's a reluctant buyer in the disinflation narrative and the rate.
오예, 가보자. 35만 원, 36만 원. 40으로 가자. 지금 현재 가격은 많이 올라왔네. 17,000 뭐 27, 28 뭐 괜찮네. 그러니까요. 오늘 나스닥 웬일이야? 일단 50을 향해서 와 진짜 너무 좋은데? 원래 사실 제가 쇼스를 가려고 했는데 뭐지? 그 10시 30분에 발표했잖아요. 그 이후로 조금 기다리다가 바로 빼려고 했는데 근데 역시는 내 느낌상으로 그냥 일단 가보자. 잘했어 진짜 잘했어. 계속 올라가네. 오 좋네. 오 설마 47, 38 잘 차이가네. 긴장되네. 시다. 오 40으로 넘어갔어. 40으로 넘어갔어. 아 진짜. 와, 이 트레이드 또한 꽤 괜찮게 벌었네. 그러니까요. 보니까 이 CPI 발표하고 나서 그 정도 아니었잖아요. 그쵸? 아, 근데 문제는 제가 사고 싶은 제품이 있는데 아직은 모자라요. 좀 많이 모자라요. 그러니까 좀 꾸준히 매일 해야 될 것 같은데요. 해외 선물은 뭐 물론 내일 모레 쉬어야 되는데 토일에 다른 방법으로 돈을 벌어야죠. 볼륨 잠시만요. 볼륨 키워줄게요. 이거 좀 얌전한 음악이라서 조금 더 크게. 계약서 늘리는 방법도 있죠. 그쵸?
Okay, we're going to have to leave it there, Tony. Thank you so much for joining with me. Good spirited conversation there, Tony Dwyer, on the markets. This is Countdown to the Open, right here on Bloomberg.
근데 쇼크를 하면 좀 위험할 텐데.
Bloomberg has enhanced search on the terminal to deliver what you need. Now, you can simply type phrases in everyday English in the command line. Compare financials.
저 사실 지금 되게 배고픈데 이 차트 때문에 코레 때문에 밥을 좀 밀려야 될 것 같아요. 너무 재밌는데요. 일단은 저는 그래프를 좀 보고 많이 내려가면 그때 좀 빼려고요. 좀 빼고 오늘 50까지 좀 힘들겠죠? 오늘 사실 시장이 되게 분위기가 좋은데 진짜 그 텐션이 안 따라가요. 저도 이렇게 놀고 싶은데 리듬 따고 싶은데 솔직히 얘기하면 피곤해요.
Servicing your clients.
100까지도 가능. 오, 이거는 안 될걸? 이건 좀 100까지 기다리면 제 심장 떠질걸? 뭐 물론 이거는 제 객관적인 생각인데 완전 안 될걸? 봅시다. 어제 같은 경우에는 어제는 볼 수 없나? 잠시만요. 아, 4시? 어제보다 생각보다 엄청 많이 올라갔네? 쉬워 보여가고 있는데? 이게 도대체 뭐지? 이거 뭐야, 설악산이야? 설악산 같은데?
There's some structural demands that are going to increase the issuance of more and more infrastructure. I've said for all along, and Bloomberg has been talking about this for a number of years, that deficits matter. It's going to be harder and harder for countries to continue deficits. And at the same time, there's an immediate need to rebuild and build out infrastructure, whether it is in digital infrastructure, as we are all trying to become more engaged with AI and other forms. We have a decarbonization process. More and more countries are more interested than ever before in energy independence. And one of the ways in countries that do not have available hydrocarbons, they're going to be doing it through wind and solar, maybe other forms of decarbonization. We have corporations now that are using partial infrastructure sales as a mechanism to finance their future growth. And then from the demand side, what can be better for retirement investors in long duration assets, high coupon that is inflation protected. So you think about our side, 65% of our clients are retirement. And when you think about BlackRock and the roles we play with many governments, our continuous ownership in stock and bonds of every major corporation in the world, more and more companies are coming to us. And over the last few years, we did build up a very large and really successful infrastructure system. I've always looked with envy, with admiration to what Bio and its team have done. We are both refugees from First Boston. We knew each other at First Boston.
오케이, 다시 올라가네.
We have a common culture. We laugh about what we learned at First Boston at the dinners. And so there's a respect, the appreciation of GIP. When you think about GIP, what are we known for? We invest in major and larger projects than we did.
아이고, 잠깐만, 좀 내려갔네. 그래도 이거 참시겠지? 잠시 내려가고 다시 올라가겠지? 해야지.
But GIP has been doing since 2006. The two organizations look like a perfect match, and then you overlay the cultural connection. And we always underestimate the cultural connection. In our business is a business of people. And if you don't have that cultural connection, that friendship, that continuity, it makes it harder to do. So I think we have the business strategy down. I'm confident we're in the early part of this infrastructure revolution. And we wanted to have scale. We wanted to have the expertise.
내려가고 다시 올라가는 인생이죠. 철학적이시네요. 오케이, 지금 좀 내려가고 있는데 20으로 내려가면 저 울어요. 하지 말고.
look, obviously we really successful. I completely agree with that. This is really the golden age of venture capital, both in terms of the need for capital as well as investors who want to. Okay? And so the question we ask ourselves is, how can we accelerate investing in new assets as well as getting pension funds, wealth funds, asset managers to additional capital? So if you look at the marriage between ourselves and BlackRock, for us, we just say 1 plus 1 equals 2. I'm not sure whether it's 4 or 5 years, but it's certainly a BlackRock is so Larry, help us know the greatest of us. The story of the member. We do large cap transactions, we do mid cap transactions. We have a terrific infrastructure primarily investment grade. Ours is primarily below investment grade. We have an infrastructure solutions business, which we don't have. So you put these two businesses together. We can go to governments, we can go to companies, large, small, medium size, and offer them an integrated solution.
인상은 계단 봐도 치는 거죠. 와, 보니까 주원 씨는 책 되게 많이 읽으시는 편인가 보다. 되게 좋은 말인가 보다. 근데 보니까 계단 많잖아요. 여기도 인천 말고도 여기 자태도 계단 맞잖아요.
As well as ETFs next, and this is Bloomberg.
until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News Now. News when you want it at the touch of a button. Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains frozen. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
For our Bloomberg audiences worldwide, I'm David Weston, and I'm joined here once again by Larry Fink, the CEO of BlackRock. So, Larry, thanks for staying with us. Your earnings came out. Besides the Purdue GFP. By the way, some earnings. They were pretty good. You got a lot of inflows. You're over $10 trillion. Congratulations on that. What do you think that tells us about the investment climate, perhaps the overall economy?
Well, I would say what the first, probably the most significant factor. I can't control one quarter or another. We had an incredible quarter. But the fact that stands out to me is over 5 years, clients were the ones who brought us $1.9 trillion. This is not market movement. This is how much new money we get from clients worldwide. And so clients have, in the long run, great need to put the money to work. We advocate only long-term strategies. We advocate that you need to be in the market. You can't be in and out of the market. If you're looking to do that, there are many venues where you could be doing that. We are trying to help people build retirement savings. We want people to have a life in retirement with dignity. We spend so much time in our world talking
Oh my god.
how we can have a healthier life.
여러분, 이게 무슨 상황이야? 잠깐 나갔다는데? 저기요.
I do believe we spend a great deal of time about
아.
talking about hope in a world today where we have
이거 맞아?
hatred, greater fear. I think there are many
왜 이렇게 느려 갔어?
to think about. Despite all those issues,
순식간에 느려갔네?
is the way to go. And I believe
어?
at the moment right now we have trillions of dollars money sitting in money market funds.
아니,
So there-
어?
that's just an indication of fear. We have more money sitting
어?
in bank balance sheets
할 말이 없네?
and deposits. That's an indication of fear or uncertainty. And I do believe one of the greatest differentials between U.S. and any country in the world is the strength of the U.S. capital markets. And this is something that we
잠깐만요.
years and years ago that we believe in.
아, 완전 파란색이네.
We believe the opportunity to invest in our economy, investing in our companies.
아, 그 조정원 씨
times
어떡해.
when you want to have a more global view, investing in the world.
아, 조은 씨 아마 손해를 진짜 많이
Any bank
봤겠죠?
deposit, you're going to outperform any money market fund. And it's our job
아,
to
어떡해.
provide the appropriate investment for our clients.
욕하면 안
so they
되잖아.
can have that life with dignity.
One of those investments changing. And you also announced sort of a new architecture, I guess is what you're calling it, for BlackRock.
그쵸, 감사의 순간에 확
Shares already, it's grown. It looks like you're doubling down on it. Explain that move in ETFs. How far did it go?
아, 진짜.
We were ridiculed by most of the financial community for not married a culture of an active investor into what these were and a passive culture. And this is why our clients
했어.
our job is to be agnostic.
아,
To work with a client to provide a full portfolio solution. But over time, more and more clients started to think about how do I want to get an
아,
exposure?
힘
Do I
빠지네.
want an exposure in this area, this product? And I
아,
could
뭐
do that
물론
through
지금
actively
쭉쭉
investing.
올라가고 있는데
In 2012,
아,
we
무슨
said
소용이 있어, 진짜.
ETFs are going to be the new engine.
네, 300만 원.
And boy, did
네,
that get
300만 원.
ridiculed by
아, 진짜. 네, 300만 원.
business community. And
아.
today, the fixed income markets are totally imbued by ETFs. And so at BlackRock, when we bought BGI, we had 290.
아우, 술면이 훨씬 더 위험해요.
And then this week alone,
그때는 존재상을 날릴 수 있으니까 이것도 조심하세요.
and so I would say to you,
술 먹이면 우발적인 행동을 하는 사람들이 되게 많아.
and so what we announced in our architectural change, iShares was this business division in itself.
놀고 싶어요. 참.
Too exclusive. We needed to include the ethos, the philosophy, the
진짜 힘
spirituality
빠지네.
of what iShares can provide everything we do at BlackRock. Because we believe we're just halfway there in the ETF revolution. That everything is going to be ETF. And we needed to ensure both active products, passive products, digital products are going to be used through the vehicle of ETF. At the same time, in this architectural change, we're elevating the whole concept that we are going to be curating more and more of our performance-based products too. So it's a very large architectural change. A lot of people have asked me, iShares is the most successful division of the BlackRock did. Why are you doing this now? And we believe it's so important to be anticipating the next move. I would also say on the beginnings of ETF Bitcoin, we believe ETFs are a technology no different as Bitcoin was a technology for assets.
아니, 조원 씨. 종까지 올라간 총인가? 끝까지 올라간다면서요. 이거 뭐지? 어? 뭐 다시 올라가고 있긴 하는데. 그래도 아직 희망이 있으니까 화이팅! 화이팅! 오케이. 희망이 있는데 내 안에 속에 있는 감정이 바로 이겁니다.
Talk about voting and voting choice and all the things. If we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own shares. Is this the end of mutual funds? I think, well, a lot of people, it's a wrapper. It's not the end of it, but I would say the dominant form of green products going forward will be in the focus. I don't want to say it's the end, because that's finite. Let's be clear, the growth of ETFs, I think, and mutual funds have been declining. And there are going to be some products where a mutual fund might be the best structure, but overall, I think everything we do is active and passive. In the form of ETFs. In the United States, it is so much more transparent. You can buy and sell that instrument throughout the day. In a mutual fund, you have to wait till 4 o'clock. In a mutual fund in the United States, you have a lot of tax issues around the activity within the fund. In an ETF, you control your tax activity. And so these are the technological changes that gave us the
왠지 내가 다시 좀 쉴 거면 다시 내려가겠지? 그럼 제가 가요? 나갈까요? 지금 협박하는 거예요. 조심해요. 제가 나가는 순간 바로 파란색이에요.
Use the word ESG anymore. I think it's just totally quite a bit now. But the amount of money that is in the decarbonization investment going to be a lot of populism, no question. Our job is to make people have a brighter future.
일단 안 나가기 위해서 지금씩 편집하는 중이에요. 왜냐면 나가는 순간 바로 파란색. 그럼 지금 계속 내려가고 있는데 골치 아프네. 또 2시간 내려가네. 미치겠다 진짜.
We have a fund for you. We have a product for you. We are aggressively sourcing new and interesting companies that are going to be the leaders in the future. A couple years ago, I wrote there's going to be 1,000 unicorns.
아니요, 저는 아직 절망. 제 담보금 30만 원 넘어가는 순간 그때 절망 사라질 수도 있는데 아직은 희망만 가지고 있어요. 와, 이거는 좀 심하다. 와, 너무 심하다. 말이 이상하게 보였어. 이거 아니다. 너무 많이 내려갔어.
So I don't think anything's changed. Obviously, how we live our lives have changed. You think about the global capital markets, but in my mind, the two biggest firms that were so instrumental in driving the growth of the global capital markets are two founding New York City companies, and that's BlackRock and Bloomberg. And I truly believe there's a lot of similarities. When we started, I think Bloomberg started in 84, we started in 88, but the knowledge barrier, the knowledge information, expansion of the capital markets, the globalization of the capital markets, to me, that is what's driving the success. David, when I go to a country now, many times the political leaders of the country are asking me how can they build their retirement system and how they can build their capital markets. They want to be more dependent in country. They're excited by having international flows going to the country to help that, but they know for long-term stability of the country, to have great and excellent companies, they need to have their own capital markets and they have to have their own retirement system. And this is something that BlackRock will play a big role, and this is one of the more exciting new chapters that I see for the next 10 years. BlackRock, and I believe infrastructure will play a big role in that exciting business.
뭐 역시 오늘도 롤러코스터네. 잠깐만. 내려가고 있는데 뉴스 필요해요.
You are listening to watch on YouTube Bloomberg Markets. I'm John Tucker, along with Lisa Mateo. Hi, Lisa. And for Paul Sweeney and Matt Miller. We made it to Friday, and no shortage of market-moving events. The U.S., U.K. launching airstrikes against Houthi rebels, oil popping higher. Banks, of course, delivering their earnings reports today. Credit quality better than expected, but investment banking lighter than expected. So what's now the outlook for 2024? Final trading day of the week. Let's give you a market update right now. S&P 500 up just 2 points, still flirting with that 47.96 number right now, 47.81. Go down, Jones Industrial is 139 lower. That is down 40 7,596. And the Nasdaq 100 pretty much unchanged right now, 16,000.
중요한 자리
As far as
자리인가요?
PPI, that's
그런가요?
lighter than expected.
왜죠?
Expected yesterday. Two-year yield down 9 basis points. The 10-year is 4 basis points.
중요한 자리는 약간 여기 있었어요. 여기쯤.
We're joined by Allison
그때
Williams, senior bank analyst with Bloomberg Intelligence. Quick overview. It suggests credit quality better than expected, but investment banking, as I said, a little lighter than expected. Allison, what's the overall take?
왜냐면 한 번에 40만 원?
Most important takeaways are
굉장히
things
괜찮은
looking more
수익이라고
positive for
생각했는데
JP Morgan and less so for Wells Fargo. And that's a combination of the net
타이밍을
interest income
놓쳐버렸어.
outlook as well as the cost outlook. So JP Morgan guided up on net interest income. They also got it up on costs, but net still the pre-tax difference going higher for them, so that's a good thing. They also surprised in the quarter versus consensus for net interest income. That resilience is something that we were looking for, and they delivered. Well,
내려가면 안 돼. 내려가면 안 돼.
I mean, certainly when you look at the returns, and that is the key metric that investors look at for banks, they look at the return on tangible equity, and that is very strong at JP Morgan, especially compared to peers.
You mentioned something that surprised you, a couple of things, but what really stood out to you when you were seeing all the results come in?
So I think the net interest income and the overall returns at JP Morgan, as we said, those are kind of the standout. When it comes to trading and banking, we're seeing a lot of different headlines, but to us, the trading is relatively resilient, so we think that's all good. The investment banking fees are showing some signs of stabilization. If you net the two together, they were a little bit shy of consensus, but I would say about in line with what the banks have guided and expected when they spoke in December.
Can I still call Citigroup?
Yes, you can. Despite all the cuts, and keeping in mind, so they have sold parts of their business. They are getting more focused, and they are going to be cutting those middle management layers. And so that's, I think, something that's going to improve. But a lot of that is really just about improving
3만, 2만, 오이, 잠깐만.
go forward that you're seeing now, and the cuts that you're seeing now are more about just running the bank better, and we're just removing a lot of extra layers of management, not necessarily the business changes that we've seen
나 몰라. 나 안 몰란다. 너무 심각한데. 마이너스는 나 그냥 바로 나가버릴 거야. 그냥 라이브는 아니고. 그냥, 미쳤다. 근데 방금 뭐가 지나갔어? 응?
Invest for the long term, or if I was an investor, I would want the banks to think long term. And certainly the U.S. banks have had a cycle of investment. Come back to JP Morgan. The outlook for interest rates, they just follow the market. They just follow the curve. And so the curve is telling you that we're expecting interest rate cuts, and so that is factored into the net interest income guidance. The card business, which has a higher yield and is the area where we're getting loan growth, that's helpful to JP Morgan. It's much smaller business for Wells and small for
미쳐버리겠네 진짜.
Allison Williams, senior bank analyst with Bloomberg Intelligence, as with the markets right now, the Dow 142 points, the Nasdaq is up 3 points. And it's 10:18 on Wall Street. That is look at some of the company news we're following. And with that, Steve Rappaport.
John, shares of ExxonMobil, BP, and Chevron are all up. A along with the price of
참,
oil. That's after the US and UK.
죄송해요. 전 말을 잃어가지고
People have been greatly worried that the
이제
Israel-Hamas war
리액션을
would
할
expand into
힘도
a regional
없어요. 진짜
conflict.
이렇게
There will be
많이
people who look at
내려가다니.
this and say it's more sign that this is closer to dragging Iran into
한
it.
시간
Iran has been a big
반은
supporter of the
무슨
Houthis.
롤러코스터야 진짜.
Remains to be seen whether they can resupply those Houthi rebels at all, given the military firepower still amassed in the Red Sea. But it certainly brings it one step closer to this becoming a much broader conflict.
Very reporting. The Houthi leader says a response to those strikes is imminent. The U.S. government is stepping up scrutiny of two telecom giants. Christina Cervetti reports.
The EPA is ramping up its inquiry of telecom giants AT&T and Verizon after an investigation found that old lead-covered cables had contaminated waterways and soil in parts of the U.S. A trade group that represents both companies said test results continue to show that telecom lead-covered cables pose no significant public health risk.
Citigroup is cutting 20,000 jobs as part of CEO Jane Fraser's strategy to boost returns. Citi says the downsizing will save it as much as $2.5 billion, but in the meantime, the firm expects to incur as much as $1 billion in severance and expenses related to the overhaul. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
물론 지금 다시 올라가고 있긴 한데 힘이 다 빠졌네. 식사하려고 했는데 이제 밥도 안 넘어갈 것 같아요. 참. 제가 제일 무서운 시장은 비트코인 시장이에요. 그 비트코인 때문에 망하는 사람 너무 많이 봐가지고 제 친구 중에서도 되게 많은 사람이 있는데 이거 진짜 그냥 예측도 아니고 로또도 아니고 카지노도 아니고 그냥 another level 완전 다른 수준이에요. 오케이, 다시 올라가야죠. 제발 살려주세요. 봐봐요, 지금 뉴스 보니까 다 빨간색인데 다 떨어지고 있는데 어떡하면 좋아. 그리고 생각해보면 이게 해외선물 같은 경우에는 매수는 빨간색이고 매도는 파란색인데 여기는 주식은 다르구나. 여기는 미국이라서 아예 초록색이네. 이제 이렇게 들었어 사실은. 그쵸. 힘이 좀 약하네. 아니 이거 뭐야? 이것도 지금 뭐야?
Nathan, thanks very much. Appreciate it. Well, we all know about
그래, 저 몰란다. 진짜 몰라.
As an investor, can you mitigate risks like that, or even try? Well, let's get some answers this morning.
아, 그쵸. 이거 색깔이 프로그램마다 다르구나. 모든 제가 쓰는 프로그램은 이랬죠. 매수는 빨간색, 매도는 파란색. 아, 그리고 궁금하시면 제가 쓰는 프로그램이 제가 그때 우리 그 댓글에 메시지를 넣었거든요. 거기 카카오 채팅방에 들어가시면 그 제가 똑같은 프로그램을 쓸 수 있으니까요. 참고하시고 카톡 채팅방으로 들어가세요. 그 영상 밑에도 링크가 있으니까 뭐 구독, 좋아요 이렇게 하는 거 아니지만 참석하세요. 가입하세요.
else people might think this is like the interest rate. So I want to talk and give a little economic outlook. Yesterday we heard Cleveland Fed President Loretta Messer. She said central bankers probably will have to wait past March before they can start cutting interest rates. What's your take on that?
일단은 보시죠. 계속 올라가고 있는데 근데 진짜 힘 빠져요. 40 수익이 40만 원이었는데 지금은 좀 애매하네. 일단은 저는 그 먹방 방송할 생각이 없기 때문에 일단 식사를 좀 해야 되는데 그 계속 차트 보다가 밥을 좀 먹을게요. 일단 제 카메라 좀 끄고 있을게요. 근데 혹시 너무 많이 떨어지면 아니면 위험한 상황이 발생하면 그때 바로 뺄게요. 근데 일단은 좀 잠깐 쉬고 잠깐 밥 먹고 있을게요. 조한 씨도 파이팅 하시고 포기하지 마세요. 그쵸, 우리가 포기하면 일러요. 조한 씨도 지금 뭐 식사하기 애매한 시간인데 그리고 야식 같은 거 먹을 수 있잖아요. 술만 드시지 말고. 일단 잠깐 나올게요. 계세요 여기.
Just those 7 magnificent stocks in the AI universe that really led the U.S. cap-weighted indices to outperform. I think that broader performance is going to be revealed this year in a period where we're going to see some volatility in the economic data, the inflation picture. I think those stocks outside the U.S. lower valuation, maybe a better earnings environment as the manufacturing sector recovers. That looks brighter to me. So we'll see the first year in a long time in the international market out there.
I look to Charles Schwab when I want to know about fund flows. What are you seeing on that front?
Investors are still favoring fixed income. Money is flowing into the bond market after many years where it was just unattractive to be there. So that's where we're seeing money go. But at the margin, we're also seeing money flow into international equities. Perhaps that's a little bit of rebalancing after last year when the U.S. outperformed. But it is interesting to note it's been several months now we've seen more money flowing into international markets than the U.S. markets. I'm speaking broadly for the industry as a whole, and that's encouraging to me as well as investors maybe reconsider their portfolios and broaden that diversification.
Hey, before we go, quickly, we started this segment here talking about risk. I want to bring it back full circle here. So you can hedge risk, but is hedging worth it because it's not cheap?
It really is not cheap, and I think that's one of the challenges here. Right? And one of the benefits of having a diversified portfolio right now, we just talked about, is the fact that bonds are actually paying you. They offer some interest now, and they're offering a little bit of an offset when we go through these periods of volatility. Just this morning, rally in the bond market on this revelation of these attacks on the rebels, and so you get a little bit of that volatility dampening effect in your portfolio with that classic 60-40 mix. That maybe that's back as a dampening factor after so many years where fixed income really didn't act as an effective hedge against equity volatility. They were beginning to see that.
Yeah, I missed out on 5%. He's, what is it, 393 right now on 10 years. That's still a screaming buy?
We still think that's attractive and a reason to extend duration. We think that around year-end, yields may be around that same level. So we don't see a big rally in the fixed income markets. We don't see a further sell-off either, and that means you can pocket some of that yield and benefit from the volatility damage.
Yeah, always a pleasure. Appreciate it. Jeffrey Kleintop, the Chief Global Strategist, from Charles Schwab. As we look at the markets right now, not a lot of movement, at least. S&P 500 up 4 points. I'm still looking at the 4696 number. The record not far from 4785 right now. On the S&P 500 up about a 10%. Dow Jones Industrial Average is down 127 points. That's down 0.3%. And the Nasdaq 100 right now 24 points higher. That is down 10%. And as far as yields go right now, they're lower after the PPI report coming in a little lighter than expected. The 10-year, 3 basis points lower. That's at 393. The more policy reactive 2-year, 9 basis points lower. You are listening to and right now, time to head to Washington. Because we have the national news after that. Amy Morris, you made it to Friday, Amy.
Thanks so much. The risk of a wider war in the Middle East is also in focus now that the U.S. and U.K. have launched dozens of airstrikes against militants in
were very tactical, surgical strikes. These strikes were very well telegraphed also, which allowed them to clear out of some of their bases. So it does seem the objective was to make a point to the Houthis without escalating and the Houthis feeling they need to take massive retaliation.
Houthis responded saying all U.S. and UK interests have become legitimate targets. They say a strike now is imminent.
Israel is defending itself against charges of genocide before an international court, saying the war in Gaza is not intended to destroy the Palestinian people. An Israeli lawyer made that argument today in the International Court of Justice. Lawyers for the court in Israel is under attack.
Mishaps with Boeing and Japan Airlines drawing fresh scrutiny of the airline engineering safety standards. Lawmakers want Congress to act on a five-year bill reauthorizing the FAA before it expires March 8th. Meanwhile, the FAA is also increasing its oversight of Boeing production and manufacturing, and it is auditing the MAX 9 production line and suppliers. Amtrak trains running between New York City and Philadelphia are holding until further notice because of signal issues. The rail operator says New Jersey Transit Northeast Corridor service is also suspended between Trenton and New York's Penn Station. And voting begins for real in the Republican presidential race Monday night. First in the nation's caucuses get underway in Iowa. Caucus goers will have to contend with a polar vortex on their way to the meeting halls. They are hardly they can handle it. Recent polls show Donald Trump with 51% backing in Iowa, well ahead of Ron DeSantis and Nikki Haley. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris and this is Bloomberg.
1040 on Wall Street. I'm Nathan Hager. Stocks are kind of fluctuating. Two-year Treasury yields are down to their lowest level since May. I expect a drop in producer prices for December. Check the markets all day long on Bloomberg. Right now, this is down 1 point. The Dow Jones Industrial Average is down 0.5% or 174 points. The Nasdaq Composite is down by 2 points. 10-year Treasury yield of 3.94%. The 2-year is at 4.15. A lot of focus on the big banks. We heard from 4 of them reporting earnings for the fourth quarter, and it's kind of a mixed bag for them. JP Morgan Chase is up 1.1%, while Bank of America is down 1.5%. Wells Fargo is down about 1% as well. Citigroup is kind of fluctuating between gains and losses. Steve Rasciuto is chief U.S. economist at Mizuho Americas.
Basically, the market has discounted this year's earnings already. So if there's any downward adjustment in this year's earnings, we think this leads to a sideways trading range in the market rather than a continued upward spike in the market as some of the bulls are anticipating.
And you can hear more of Steve Rasciuto's outlook for earnings across the market on the Bloomberg Surveillance podcast. NYMEX crude is higher by 1.9%, so trimming some of its gains. Now trading at $73.40 per barrel. COMEX gold is up 2% at $2,058.80 per ounce. The euro 1.0978 against the dollar. The yen 144.76. Biggest drag on the S&P right now is airline stocks. Delta backed away from its 2024 profit target on persistently high costs. Right now, Delta shares are down 8%. Its peers are falling as well. United's down 9%. American Airlines down 8.5%. Southwest Airlines down 5%. That's a Bloomberg Business Flash. Bloomberg Markets continue with John Tucker and Lisa Mateo.
All right, Nate, thanks a lot. And that brings us to 10:42 Street Time. You are listening to Bloomberg Markets. I'm John Tucker. Welcome to Friday. We're in, of course, with Paul Sweeney and Matt Miller. Lisa, there's a question for you. What is it that keeps you up at night?
My kids. I don't know. I'm always worried about them. That keeps me up at night.
That's pretty much it. For the folks at the conference working with that question, the global CEOs, Dana Peterson, Chief Economist, with the results of their survey. So Dana, welcome, first of all. Are the big wigs in the C-suite gloomy, happy, or what?
It's kind of a mix. They're very worried about recessions and slowdowns as well as high inflation and geopolitics. But they are looking forward to growth, and they certainly have plans in terms of expansion and also investments in innovation to make sure that they do grow next year.
Now, what are their biggest worries? I know recession, inflation. I mean, are they ready for it? How are they preparing?
Well, the interesting thing is that given those two things that they're very, very worried about, they are not prepared to deal with another crisis having to do with recession or high inflation. They're also very worried about labor shortages and geopolitical risks, including wars. And for most of those things, they are not really ready. But they are thinking about, well, how do we push through despite these very high risks? And certainly when it comes to labor shortages, they're looking at attracting and retaining top talent. So that includes things like investing in their talent, AI, upskilling, and training. So they're certainly trying to find a way to respond.
What is it that backs up those views? Is it anecdotal evidence? Is it sales figures? I mean, they have to be gloomy for a reason.
Well, CEOs are notorious for looking ahead and looking down the road. And certainly, it's also going to be colored by recent experience. Certainly, in recent experience, they've seen major increases in input costs. And certainly, that includes higher interest rates. The cost of capital is elevated. And all that feeds into inflation. They've seen around the world, China slowing, Europe is slowing. A number of conflicts are causing disruptions in production and trade and investments. And all those things have gotten them very worried.
So with all these negative things that we're hearing, how do they even plan to grow profits in 2024?
Well, they're looking at expansion. So expansion means looking at new regions and countries to invest in, new lines of business, looking at new products and new services, and also using tools like AI to really enhance the performance of their businesses and also their workers. And I think all of this is going to be great for not only cutting costs and driving the bottom line, but also increasing profits.
Well, wait a second. If they're worried about labor and they want to hold on to their workers and talent, are they paying them more? I mean, is it an inflationary picture we're looking at?
Well, certainly when we look at the BLS data, yes, in those industries that are suffering from labor shortages, they are paying their workers more. And also those industries where they're worried about people quitting or a lot of people are retiring, they are raising wages. But again, that's very costly. So businesses are trying to find ways around that. And a lot of that's through digital transformation and technology.
You're talking about the workers that are getting paid, but where are they working? That's the big question. This whole battle back and forth between, are you in the office? Are you at home? Where are you going? Are CEOs, are they just throwing in the towel and saying, you know what? You guys do what you want to do? Or are they going to try and get more people in the office?
Well, it's interesting. We did ask about the imperative to bring people back to the office, and it was really low. CEOs are not that focused on it. They're more focused on flexibility and making sure their workers are having a good experience, that they're collaborating, that the culture is very important, that there's the right culture to keep their workers and also to attract new workers. So again, I think they're recognizing that remote work is here to stay in some form, but they're really trying to enhance the culture to make sure that people do, when they come into the office, they have a good experience and they move up.
Is this survey broken down by
Yes, it's definitely broken down by region, and so that includes the U.S., Europe, Japan, Latin America, and then the rest of the world. When we look at those regions, there's really not much of a big difference in terms of how CEOs think in terms of the big issues. Though I would note that Japan was very much worried about labor shortages and also U.S.-China relations. When it comes to industry, we look at finance, manufacturing, and then everyone else. And certainly there's a big focus in terms of finance on the cost of capital and higher interest rates. But for the most part, there's a lot of synergies, a lot of commonality in the way that CEOs around the world are viewing business in the business environment.
Yeah, with manufacturing, since it's been in recession, I would imagine they're more pessimistic than the most.
Yeah, they definitely are, and you're right. There has been this manufacturing recession, and a lot of that reflects the fact that manufacturing was one of the pandemic darlings. It did extremely well when we were stuck at home and buying things. But certainly as we shifted more towards better balance in services consumption, manufacturing experienced as well. And certainly when you look around the world, you see that there's very weak growth in China, also very weak growth in Europe, in and out of recession. UK, Germany may go back into recession, and these are areas that tend to be big manufacturing hubs and also big consumers of goods. And so if you have weak demand in those areas, that's certainly going to impact the manufacturing sector as well.
Hey, Dana, we have about probably a minute left. You had mentioned AI, so I want to kind of bring it back there because this has been another problem in the workplace too. Are CEOs, are they embracing it? You had mentioned they have to do some more training. How are they tackling AI in 2024?
Well, it's interesting. They're welcoming AI with open arms. Most CEOs that we canvassed said they had already adopted AI or have plans to do so. So they're overwhelmingly for it. They think that it's going to enhance profitability, it's going to make their workers more productive, but they are wary. They are aware that there are some responsibilities. There may be more regulation. You have to think about how to make sure that AI is not going to compromise your intellectual property or even that unethical use. But for the most part, companies are very welcoming. They're excited about AI.
All right, Dana, always a pleasure. Appreciate it. Dana Peterson, the chief economist at the Conference Board. What CEOs are worried about? Right now, as we look at the markets, S&P 500, that's down 6 points, down to 0.1%, 47.73 on the index. Dow, 214 points lower, that's down 0.6%. The Nasdaq, 124 points lower. And you are listening to the markets. I'm John Tucker, along with Lisa Mateo. And that brings us to 10:50 on Wall Street. Let's get another little company news. And with that, here's Steve Ryan.
John, Citigroup says it will eliminate 20,000 jobs in a move that will save the firm as much as $2.5 billion. Charlie Pellet has the latest.
Steve, it is part of CEO
Jane Frazier's quest to boost the Wall Street Giants' lagging returns. Citigroup says firm-wide expenses are expected to drop to a range of $51 to $53 billion over the medium term. In the meantime, though, the firm expects to incur as much as $1 billion in expenses tied to severance payments and Frazier's broader overhaul of the bank. The outlook for cost savings helped mask a disappointing fourth quarter where Citigroup's fixed income traders turned in their worst performance in 5 years. Charlie Pellet, Bloomberg Radio.
Thanks, Charlie. The FAA says it will increase its oversight of Boeing's production and manufacturing operations a day after it opened a formal investigation into the plane maker over last week's accident on a 737 MAX 9 jet. The regulator is conducting an audit of the MAX 9 production line and might even bring in a third party to oversee inspections and quality control. CVS plans to close dozens of its locations in Target stores as the drugstore chain grapples with rising costs in its pharmacy business. Shares of CVS are down more than 3%. Anheuser-Busch InBev is going for gold. The brewer agreed to become the sponsor of the Olympic Games. The partnership will last through 2028. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And I'm John Tucker, along with Lisa Mateo. We're in for Paul and Matt today. Just ahead, update of the markets. But first, let's get an update of world and national news. And to do that, we head to Washington now and say hi to Amy Morris.
Hi, John. Thank you. The U.S. and U.K. have launched dozens of strikes on Houthi targets in Yemen early today in a bid to stop the Iran-backed group's shipping attacks in the Red Sea. Bloomberg's Bill Ferries explains.
It looks like the U.S., U.K., and their allies hit more than a dozen sites, targets in Yemen, believed to be used by the Houthi rebels for everything from like radar facilities to weapons depots, places where drones could be assembled and stored for launch, as well as sites holding ballistic missiles.
These appear undeterred. They say all U.S. and U.K. interests have become legitimate targets now, and a strike will be imminent. President Biden announcing federal student debt will be wiped clean for some who took out small loans. Those who got less than $12,000 in loans and have been paying them off for at least 10 years will see their remaining debt canceled immediately. This applies to those who are enrolled in the SAVE repayment plan. A polar vortex about to unleash an Arctic blast across much of the U.S. this weekend. Bloomberg meteorologist Rob Carolyn tracking the storm.
Low pressure continues to lift down to the central United States. It'll produce rain across the Ohio Valley, the deep south, and also the Gulf Coast. Some of the storms in the Gulf Coastal region and also the southeast may be strong as the day goes on.
Bloomberg meteorologist Rob Carolyn tells us there's also snow with this system, with blizzard warnings in effect from Minnesota into Illinois. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. John and Lisa.
Amy Morris in Washington. Thanks very much.
All right, so we have a little talker here, John. This story kind of stuck out. You know, we're in New York. We're in New York, right? You see rats sometimes all over the place, okay? So
The little furry kind?
yeah, so the problem is that a lot of people are having issues with the rats in their cars. So it's getting cold out, so the rats are finding somewhere warm, and that's the engines of your car and different places to stay. So they're starting to nibble, and they're causing a lot of issues for problems. So there's one theater professor at City University in New York. He's had like a couple of these rodent infestations in his car, and he's done different things. So what's trending is what's happening, what people are doing to keep the rats away. So he has wrapped his ignition wires in minty tape. He's doused garlic-scented potion on his engine, and
That makes it sound like they're tasty now. Minty garlic?
I know. He parks even in a different spot each night, trying to see which is the better way.
Good luck with that.
I know, I'm telling you. So a lot of other people, wait, let me find some of these other things that they're doing. Let's see, cold weather. Okay, so here we got. So another thing is they're sticking bars of Irish Spring soap into the cabin, because I guess that keeps them out, the center console and the trunk as well. So that's another tip you can use if you're having a rat issue. My husband's coworker actually did have a rat issue in their parking lot, and her car wound up stalling on the way home because it finally kicked in. You know about that. And this is funny because Jess was just talking about this. Remember the pizza rat? Come on, Jess, remember the pizza rat?
Somehow John Tucker didn't know about this.
This is why
How
I
could
live
you
in the
forget about the
suburbs.
pizza
We don't
rat,
have
John?
rats there. And it's a big issue. The insurance industry estimated to have paid out more than 91,700 car damage claims caused by rodents. Also have to give credit to squirrels and rabbits nationally between July of 2022 and June of 2023. This is one of the latest estimates by State Farm. Yeah, they like the little chewy rubbery things in your car as well. So
Yes, and that's the problem. They're chewing that, and then people are getting stuck. They're driving home like my husband's friend, and now you got to call a tow truck on top of it because your car is stolen out on the roadway.
I thought, didn't we have a rat czar in the city? She was going to take care of it.
She's supposed to be.
That's right. What happened with that?
But I see
She's falling down on the job.
I think
A rat's living in my car.
so. Yeah, garlic oil, white pepper, pine sol, all that kind of stuff. If you have a rat-
Also wards up the vampires as well.
Yeah.
And right now, S&P 506 points lower, 47.74. You're listening to Bloomberg Markets. Stay with us. Market check straight ahead.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True, what the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And hi everybody, I'm John Tucker along with Lisa Mateo in for Paul Sweeney and Matt Miller. Well, yeah, you made it to Friday. That's good. No shortage of market-moving events today. U.S. and U.K. launching airstrikes against Houthi rebels, oil popping higher, banks delivering their earnings report. Also got another inflation report. This one was a little cooler than the CPI yesterday. We're talking about the PPI we got this morning. And let's take a look at trading this Friday. Nathan Hager here with a market update. Nate, how are you?
Yeah, watching. Not too bad, John, with the stock markets moving just a touch lower off the back of that cooler than expected PPI print. We continue to watch Treasury yields very closely. The 2-year policy sensitive, of course, it's down to its lowest level since May after those producer prices came in with an unexpected decline. Victoria Fernandez, chief market strategist at Crossmark Global Investment, says the downward trend for inflation could weigh on corporate earnings.
You look at corporations as a whole, they are losing some of that pricing power. As you have the disinflation come in, as wages continue to stay high, these companies are losing their pricing power. We think it's going to affect margins across the board, and that's going to be one of the key themes for this earnings season. It's one of the reasons we think the market is probably going to have more of a pullback than what we've seen so far.
And you can hear more from Victoria Fernandez of Crossmark on the Bloomberg Surveillance podcast. We are seeing just a bit of a pullback for stocks. Let's check the markets as we do all day long here on Bloomberg. Right now, the S&P 500 is down 0.1% or 6 points at 4774. The Dow Jones Industrial Average leading the declines right now, down 0.6% or 211 points, trading at 37,500. And the Nasdaq Composite's little change to the downside, down 8 points at 14,963. NYMEX crude is up 2.2%. We'd seen gains in the pre-market as high as 4%.
여러분, 제가 다시 왔는데 역시 뭐 할 말이 없네. 할 말이 없어요. 뭐 차트 보시면 아실 수 있는데 상황이 별로 썩 좋지 않네요.
Nathan, thanks a lot. And now we can look under the hood. Let's see stocks on the hood. And companies to watch.
언제부터 잘못하고 있어서 모르겠지만 아이고 알고 있는데 그땐 타이밍을 놓쳤는데 사실은 제가 밥을 먹으면서 계속 보고 있었는데 완전 마이너스까지 내려갔어. 그때 진짜 그냥 방송 끝내볼까? 이런 생각도 했는데 그래도 조금이라도 좀 올라가야죠. 조금이라도 소액을 보고 낫지 않을까 싶어서 일단 다시는 아니지만 계속 매수한 포지션 계속 유지하려고. 그쵸. 마이너스까지 내려갔죠. 저도 봤어요. 진짜. 몇 대쯤? 그러니까요. 제가 나갈 때마다 항상 돈 일이 생겨요.
Bank earnings. Well, let's start there because give me the
이건 또 무슨 상황이야?
JP Morgan Chase and everything else.
들어왔는데 라이브 방송에 다시 들어왔는데 수익이 좀 올라가네요. 자세도 쭉쭉 올라가고 있는데 근데 이번은 이건 끝이야. 늦은 시간이기도 하고 일단 조금도 욕심을 내고 수익을 좀 본 뒤 뺄게요. 그래야 될 것 같아요.
Set to cut 28,000 roles because Jane Fraser is really trying to boost returns here. But they did also say when they were Jane Fraser was on the call talking about how the fourth quarter was, very disappointing there. And so you're looking at that stock, coming under pressure. It actually had been higher pre-market.
오케이, 올라가네 조금.
2%, but you're seeing that giving back gains. So kind of more broadly here when you are looking at the banks lower, but they've also been on a tear. So the KBW Bank Index, if you look at from actually last quarter coming into this year, it was over a 20% gain. It was up about 23%, and so that was one of its best quarterly gains in years. So a lot of those, especially what happened with those banks last spring with the regional stresses, with that, you did see banks bounce back coming into this year. So some of those stocks giving back some of the gains there this morning. But I mean, overall, especially when you think about what's happening with Bank of America in particular as well, because that's definitely a bank that is so consumer focused. So when it comes to Brian Moynihan, their CEO, and their outlook for what the consumer is, I know last year so many economists got it wrong, thinking about the economy would be slowing down much more dramatically. If you look at that third quarter GDP number, it was close to 5%. But the Atlanta Fed right now, they actually have a 2.2% annualized growth for the fourth quarter, which is obviously that gangbuster, typically holiday quarter, which really powers consumer spending and GDP. I mean, obviously it's not 5%, it's around 2.2%, but it's still pretty strong growth there. But we are going to get an update.
아니요, 이런 음악은 안 되고
December next week. So that's going to be key because
조금 더 신나는 음악.
Because the Atlanta Fed model for GDP can be pretty volatile. So as those numbers have been coming in, actually those estimates for GDP are up because the numbers for retail and consumer spending were stronger than expected in November.
괜찮네.
So it's going to be key to see if that momentum keeps up for December, because it seems like that outlook for over 2% growth for the last quarter could continue to hold there. So
하늘로 가시네요. 아니요, 아직은 63빌딩이에요. 아직은 63빌딩 수준이에요.
Lisa, when we leave for the day, we're done. Jess sticks around because she has to work on
at my day job.
And the weekend and next week. Real quick, what are you working on?
Yeah, so we actually have a earnings watch column coming out tomorrow that I'm going to put together. So this is Chino Martinez.
오케이, 올라갑시다.
Consecutive contraction quarters when the S&P was in an earnings recession, so it's coming out of that. But the big thing, it's in particular when it comes to the magnificent stocks, their earnings growth has been so gangbuster, and actually the growth is supposed to be around 22% for 2024, so that's obviously more than double for the S&P 500. The S&P 500 is supposed to have 11% this year, but when it comes to the tech giants, it's supposed to narrow more this year, just given the base effect says, because the earnings were so strong in the last few quarters because of cost-cutting efforts that can really help with operating margins. So that really ties into what the future of the stock price is going to tell you.
아무튼 일단 수익을 좀 보고 나서 빼야 될 것 같아요.
Right. There's so many different names. It was Fang, and then now we're
뭐 물론 오늘 더 이상 큰 수익을 거의 40까지 볼 수는 없을 것 같고, 그때 가격은 얼마였죠? 거의 막 17,926 정도? 여기 있었네요. 그 정도 표에서는 안 올라갈 것 같아서.
Part of building America, invest in BAM insured bonds. That is going to topple.
그러니까 일단은 오늘은 여기까지 할게요.
Yes, a shake-up in Muniland. Fortunately, just the guy who's Eric Kazansky is the senior municipal bond strategist with
역시
intelligence.
빠른 내려가고.
What are these separately managed accounts? How are
일단은
they
오늘
shaking up Muniland?
Hey, good morning.
오늘은 결과는 좀 나쁘지 않아요. 꽤 나쁘지 않다고 생각했는데 1022만 원이면 괜찮을 것 같아요. 물론 좀 아쉽네요. 그때 40만 원 그때 볼 수 있었을 텐데 참 아쉽네. 나중에 기회도 또 오겠지 뭐. 맞다. 그럼 오늘은 뭘 벌써 토요일이지만 그럼 내일은 토요일은 쉬는 날이다 보니까 힘을 내야죠. 그럼 주한 씨도 좀 쉬시고 우리는 월요일에 다시 되는 걸로. 아니요. 대단한 걸. 그래도 차트와 뉴스를 계속 켜놓을게요. 저는 없으더라고. 심심한 일이 없을 것 같아요. 주원 씨는 리듬 따시고 계속 그거를 하세요. 왜냐면 시장이 아직 열려 있으니까. 저는 일단 여기까지. 사실은 오늘 좀 만족해요. 그럼 좀 편한 마음으로 이번 주말을 보낼 수 있을 것 같아요. 네, 그런데 주한 씨도 다른 시청자분들도 주말 잘 보내시고 그리고 오늘도 거래를 성공하시길 바랍니다. 정해 보면 안 되니까 천천히 아시죠? 오버하면 안 되고 천천히 하시고 파이팅 하세요. 전 이만 가겠습니다. 감사합니다.
I don't even know how that works, but they're back in the market. Why in God's name would anybody give them any money?
You know what? You could ask the same question about Puerto Rico or Detroit, right? I think the good thing about the municipal space is that, the memory seems to be a little bit short-lived and forgiveness seems to be plentiful. Look, what happened with Jefferson County, Alabama, the first time around really was focused around, bad derivatives, bad swaps that they got into or shouldn't have been in the first place. The deal that was just structured, certainly a far cry from where we were structuring products in 2008. So I think much better from a strength standpoint and security standpoint. And the market was very receptive of that. You know what? I think a lot of people are poised for several Fed cuts coming into this year. I know our rate strategist isn't exactly on board with that sort of thinking, but it certainly seems from a flow standpoint and a valuation standpoint that buying has been plentiful and people are positioning their portfolios to take advantage if that shift does come from the Fed.
Before we delve into what Ira is eating in the background, instead of munis, why don't I just buy treasuries at this point?
You know what? That is a very good question, and we get asked that a lot. And, if you look at just a traditional valuation metric, which is just the ratio of a AAA muni to a U.S. Treasury, on paper, they don't make a lot of sense. But I think the real analysis comes when you get away from AAA municipals, because really the bulk of our market is single A and AA paper. And you look at that on an after-tax basis versus corporates. And, a chart that we look at all the time shows that you can pick up almost 200 basis points by holding a municipal bond versus a corporate. And frankly, the default rate on municipals is statistically insignificant and much, much less for corporate bonds going into any kind of economic slowdown period.
What sort of deals are out there that really catch your attention? I mean, wacky stuff, monorails, or anything like that?
Nothing crazy that's in the pipeline. I think it's refreshing to see new entrants in the marketplace in the high yield space, like First Eagle, being headed by John Miller, who left New Bean. To me, that signals that there's going to be, at least a decent new issuance flow in the high yield and sort of the speculative credit space for them to launch a new product in this environment. So there's probably something we could talk about later in the year, but nothing right now. As far as spread, the Jefferson County, Alabama is probably the more interesting thing that we've seen in quite some time.
And who's in danger of going down that route that DC? Is there significant risk of default anywhere?
You know what? No. Off the top of my head and looking sort of, at all the metrics that we look at on a daily basis, nothing from a spread standpoint that would indicate risk is being priced into the market with any sort of significance right now. When we did our outlooks for 2024, the areas that we are, I would say like more skeptical about are going to be senior housing and also higher ed. And when the higher ed comes into play, I think for us, it's really a risk of, Congress coming in and looking at their tax exemption status on the heels of everything that's gone on in the last several months.
And I'm not going to let you go until you answer my question. What's going on in New Jersey with the Mall of...
Mall of America. Mall of America? No, American Dream.
American Dream Mall.
American Dream
Is that
Mall.
still some investor's dream, or is that just completely turned into a nightmare? We've got about 30 seconds.
Yeah, no, I mean, look, obviously it's in default, workout scenario type situation, but, people are still going and money's still coming into the mall. I think it was just an ambitious project at the wrong time in the wrong place, but, history's going to sort of dictate what's going to happen with that going forward.
Ferris wheel that you
And indoor skiing, they have it all.
Oh, indoor skiing.
Yeah.
And he turned out okay. He didn't break his leg or anything like that. But I love the fact you can ride the Ferris wheel. Eric presents Senior Municipal Bonds. Everything you need. And as we look at markets right now, the equity markets 47.82 on the index. The Dow Jones Industrial Average right now 176 points lower. That's down 0.5%. The Nasdaq 100. You're listening to Bloomberg Markets. I'm John Tucker, along with Lisa Mateo and RuPaul and Matt. Stay with us. Now let's take a look at company news right now. It is 11:18 on Wall Street, and Matt, you see that.
John, Citigroup is cutting 20,000 jobs as well as
Jane Fraser, we know, inherited a bank that was bloated, that had regulatory issues, and that had many layers of bureaucracy that she is now taking an absolute axe to. Investors have largely rewarded her moves to do that, but it'll take a minute to get through all those layers of management. Now, that is the 50 story, but where does she get competitive in those Wall Street businesses? And also, I'm looking at cost of credit as well.
BlackRock is buying global infrastructure partners for $2.5 billion. It's being by CEO Larry Fink, player in the rapidly growing market.
When you think about GIP, one of the they have major and larger projects in the region infrastructure, like Gatwick Airport and Sydney Airport. But they're particularly superb in the operational efficiencies of these investments. They improve the quality of service.
BlackRock CEO Larry Fink speaking with Bloomberg's David Weston. Volkswagen will suspend production at its plant in Belgium next week as attacks on vessels in the Red Sea disrupted the company's supply chain. The factory will hold out for 3 days after ships have been rerouted to avoid violent attacks by Houthi rebels in one of the busiest shipping lanes. Those are the company's stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
television and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up to 11:22 on Wall Street, I'm Nathan Hager. Stocks are mixed, and two-year Treasury yields are at their lowest level since May after an unexpected drop in producer prices for December. Firmed up bets in the market that the Fed could cut interest rates sooner than it's been saying. We check markets all day long on Bloomberg. Right now, the S&P 500 is little change up a point. The Dow Jones Industrial Average is lower, down about 0.5% or 179 points. NASDAQ Composite is holding on to a gain. It's up 15 points or 0.1%. The 10-year is up 4/32 for a yield of 3.95%. Policy-sensitive 2-year is at 4.14. 6 of the 11 main industry groups in the S&P are higher right now, led highest by communication services and energy. Consumer discretionary and healthcare are the biggest decliners, and healthcare is kind of the biggest drag on the Dow right now. The biggest decliner there, United Health Group, it came in with costs that were bigger than expected for health expenses. That's driving some other insurers lower as well. Humana is down 3.5%, as is CVS, the parent company of Aetna. NYMEX crude is up 1.4%, up 98 cents now, trading right at $73 per barrel. We've seen West Texas Intermediate recording with a 75 handle after those U.S. and UK level attacks on weekly targets in Yemen. COMEX gold is up 1.9%, trading at $2,057.90 per ounce. The euro, little change against the dollar at 1.0968, and the yen is at 1.475. That's the Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Lisa McCann.
All right, Nate, thanks a lot. Response to the U.S. and UK airstrikes is imminent. That's at least according to the senior of the Houthi ruling party. He was speaking to tens of thousands of supporters in attendance at Yemen today following the U.S. and UK airstrikes on Houthi-controlled areas of Yemen. Let's get you updated now on these geopolitical events. We're joined by Yuri Kaufman. He's the author of 18 Days in October, Yom Kippur War, and how it created the modern Middle East. Thanks for being with us. Let's start with these attacks. Can the Houthis back up these latest threats that we're hearing from them?
Oh, they most certainly can. They have a real capacity to disrupt shipping. They've already said, you're not going to stop us. You can't bomb these people into these donates because they're already in the stone. The Saudis have pretty much done that already. And the fact of the matter is, it all gets back to Iran. If you go back to the year 2005, then Iranian President Mohammad Khamenei, who is considered a relative moderate, and a high Syrian leader, Klaas. And the way Klaas says it, at that time, Khamenei said to him, 20 years, meaning in the year 2025, Iran is going to be the counterweight to the United States. And Iran is pursuing that strategy all throughout this period. What they do is, whenever you have a political vacuum and an Islamic population, it doesn't matter if there's Muslims or Sunni, the Iranians immediately jump in, and the first thing they do is they get control of the school system. And they indoctrinate the kids with their very radical brand of Islam. And then 12 years later, they've got themselves a wonderful proxy war. And they've done this in Lebanon, and they did this in Syria, and when the Syrian civil war broke out, children in kindergarten didn't even get out of high school. They did it in Iraq, and now they've done it in northern Yemen, and the results now.
I want to get back to the people might not realize here is that, number one, give us a little bit of background on who they really are and talk about
Well, the Houthis are the Shiite group in northern Yemen. They're Bedouin. And a very distinguished commentator in Israel, a man named Tzvi Yechezkeli, said they are the only group that when they speak on Al Jazeera, you have the words on the bottom translated because they speak a kind of unusual Bedouin dialect. All commentators say the same thing, that even in the group of Iranian proxies, and we're talking about some really, really radical people, Hamas and Hezbollah, etc., that they stand out. The Houthis are radicals among radicals. So it is going to be very, very, very difficult to deter.
Well, where is Saudi Arabia in all this? Have they just pretty much given up their out of their hands.
Yeah, that's exactly what's happening. The Saudis are doing it. And this is part of the reason why they tried to get for the Gaza war and why they right back at the table to get into the war. And they badly need this deal. They need to do a humanitarian agree. They understand that they are a threat. Everyone remembers, the region remembers what happened with Kuwait when Saddam Hussein invaded. I don't think we would have rescued Kuwait had it not been for the fact that we used oil. The Saudis understand that. So in 20 years, when we probably no longer need that oil, and of course we'll be dealing, we'll be buying and selling oil for decades, but you're going to reach a tipping point where the supply of 100 million barrels a day and 80 or 85 million barrels a day. At that point, oil pricing is going to crash. We're not going to need it, and the Saudis are understanding the Ukrainians, if they get attacked at that point, what is America going to do? And that's why they want this defensive so badly.
What's the ultimate goal of the Houthi rebels?
Everything gets back to Iran. They have this wonderful strategic weapon. Those who think this will end the Gaza war ends, I think are fooling themselves. Iran has a strategic weapon. They're going to utilize it whenever they feel they want to, whenever they've got some confrontation with the United States or perhaps in Europe. It's not going to go away anytime soon.
Yeah, I was going to ask, when will consumers worldwide, is this going to affect their time?
I think it will. 12% of trade goes through. It's called Bab el-Mandeb. It's that narrow choke point going into the Red Sea and then ultimately the Suez Canal. Egypt is, of course, going to be very affected by this. The Suez Canal is a very important source of foreign exchange for them. And I have to say, this goes back to the reason why so many people opposed the Iran deal. If you go back to the Iran deal, the JCPOA, the core bargain was that Iran would not make a bomb, but they would get to do everything short of making a bomb, develop all that technology and even a missile capability to deliver a bomb. But the real key was Iran would be allowed to continue to engage in these proxy wars all over the globe and not have any sanctions, still be embraced as a normal member of the international community. Now look around the world today. You've got Hamas engaging in the butchery since the Holocaust. You've got Hezbollah shelling Israel, militias attacking Americans. Now the Houthis disrupting 12% of global trade, and this is with Iran under sanctions. Imagine what would happen if Iran was not under sanctions. You would see this with on steroids. So this is the reason why it's probably, and it's a close call, I admit, because Iran would have bombed Kaiser, but probably the better course is what a lot of people, and not just opponents of President Obama, it was even, for example, Senator Schumer, oppose the Iran deal, and this is why. The other thing is, and it's a painful thing to have to say, but we're going to have to start living by the golden rule, or at least the golden rule as it is applied in the Middle East, which is to say, we got to do unto others as they are doing unto us, and like Iran and the proxy wars discussed, we got to start waging proxy wars against them. No shortage of groups opposed to the Ayatollahs. Even inside Iran, you've got a lot of minorities, Syrians, Turks, and Baha'is. Maybe there'll be some shadow group that starts to target Iranian cities in the Strait of Hormuz, or maybe there'll be some shadow militia in Iraq that fires a drone into Iranian oil infrastructure. It's not a pleasant thing. Nobody wants a wider war or any war, but this is probably the only way you're going to get any kind of results.
All right, well, assess for us the prospects of a wider war at this point, and whether or not within the Biden administration that is considered to be something that's even politically palatable.
Nobody wants a wider war. Nobody in Israel wants a wider war. Nobody in Washington wants a wider war. But we do seem to be inching in that direction. It doesn't seem like on the other side they want a wider war either, but it's very, very hard to gauge intentions. I just want to point out as an aside, how did Israel get caught so badly by surprise by Hamas? The answer is that you only plan for attacks you considered impossible, not for attacks you considered to be impossible. And the best analogy is 1972 Munich Olympics. Nobody thought that anybody would up and attack the Olympics. And if you had said something to German security officials before, they would have said, why would somebody do that? Well, it turned out somebody did do that, the Palestinians. Here we are in a situation where Israel was supplying Gaza. Israel supplied Gaza with most of its water, its food. They gave the Gaza Palestinians 5.7 billion gallons of water just in 2022, without which they die of thirst. 67,000 trucks Get them in that system. Those 18,000 talents, get them working into that. They better get their resumes together. We're not coming back to Israel anytime soon. Gaza Palestinians are now going to become part of the international community, living on humanitarian assistance, not unlike Arabs in Syria in Egypt. And nobody wants to do that. And in Hamas and Israel, and they're saying things like, well, you know, we want to live, we want to kill.
All right, just because of time, we're going to have to wrap it up. Yuri Kaufman, author of 18 Days in October, the Yom Kippur War, How It Created the Modern Middle East. Let me give you a quote on crude oil. We'll start with the international benchmark, which is Brent. That's up, 1.6% right now, up $1.22. Below 80, though, at 78.62. And West Texas, that's up 1.5%, 73.09 a barrel. You are listening to Bloomberg Markets. And that brings us to 11:33 on Wall Street. This is an update of world and national news. And with that, Amy Morris joins us from the Bloomberg 99.1 newsroom in Washington.
Thanks so much. The risk of a wider war today, the U.S. launching dozens of airstrikes against Yemen. And President Biden says he will take more action if necessary. Bloomberg's Ross Matheson says high tensions are leading to the risk of a wider war. There's a lot going on at the moment and a high tension environment. So the tensions are not going to any to some Israeli forces to kick things over into a full-scale conflict. At least the initial interpretation is airstrikes overnight responded saying all U.S. and U.K. interests are now legitimate targets for them. Mishaps are going in depth. Japan Airlines are drawing fresh scrutiny in the airline industry for safety issues. Lawmakers want Congress to act on a bill that reauthorizes the FAA before it expires in March. Meanwhile, the FAA is also increasing oversight of Boeing production and manufacturing on the MAX 9 production line in Washington. Voting begins for Rio in the Republican presidential race Monday night. The first of the nation's caucuses get underway in Iowa. Caucus goers will have to contend with the polar vortex on their way to the meeting halls. Wendy Schiller is director of the Alfred Taubman Center for American Politics and Policy at Brown University.
People who are super enthusiastic about Trump, which tends to be the Trump supporters, are going to get out the door to show up in person to express their support for Donald Trump. Part of how they feel about Donald Trump, they want to be known for supporting him. Whereas, you know, the supporters of DeSantis and Haley are the people who are against Trump. And, you know, how much are they motivated to get out the door in the really cold weather? But I do think Iowans are fairly hardy.
Brown University's Wendy Schiller spoke on Bloomberg Daybreak, and recent polls show Trump with 51% backing in Iowa. Global news 24 hours a day and whenever you...
11:40 on Wall Street. I'm Nathan Hager. Stocks are moving a touch lower as we head toward the lunch hour, but the big moves are in the bond market. We are seeing buying for treasuries after producer prices came in with an unexpected drop following the stronger than expected consumer price index we got yesterday, though. Global head of macro at Wells Fargo, Mike Schumacher, says investors need to keep in mind there could be a slight risk that inflation sticks around longer than they might like.
There's at least a chance you get core inflation in the U.S. that sits in the high twos. And in Europe, it doesn't approach 2%. And then what? What do you do if you're a central banker? We don't know. They probably wait and watch for a good 6 months and then say, do we really have to come in and hike again? We don't want to do that, but we can't really come in and ease. I'd say the chance of that's probably a 10, maybe 20% chance, but it's certainly material. People have to think about it.
You can hear more from Wells Fargo's Mike Schumacher on the Bloomberg Surveillance podcast, but those producer prices are firming up bets in the market that a March rate cut could be on the way. So let's check the markets as we do all day long on Bloomberg. Right now, the S&P is down 6 points, or about 0.1%. Dow Jones Industrial Average down 213 points. That's a drop of 0.6%. The NASDAQ Composite is down 18 points, or 10.1%. The 10-year Treasury is up 6/30 seconds now. The yield at 3.94%. The 2-year at levels we haven't seen since May, down to 4.14%. A drop of 10 basis points for the policy-sensitive 2-year Treasury. 6 of the 11 main industry groups in the S&P are in the green right now. Energy and communication services are the biggest gainers. Right now we're watching NYMEX crude. It's still up, pairing some of its earlier gains, but still higher by 1.6% at $73.19 per barrel. COMEX gold is up 1.9% at $2,056.60 per ounce. The euro 1.0964 against the dollar. British pound 1.2750. The yen at 144.77. Bitcoin right now down 5.5%. Down to around 43,600. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Lisa Mateo.
All right, Nathan, thanks a lot for that. We appreciate it. Nathan wrapped up there with Bitcoin as well. So let's pick up there. The Bitcoin ETFs, the trading. It was a groundbreaking day yesterday. And who better to wrap it all up for us and tell us what's going to happen next? Katie Greifeld from Bloomberg News, our Bitcoin ETF guru. So we're calling it an historic day. Is that the correct label?
I think it's fair to call it that. Groundbreaking, watershed moment, etc. Those are all words.
You're basing this on volumes or what?
There is actual data to back that up. So let's go through some of it. So we had 10 ETFs come out the gate yesterday, spot Bitcoin ETFs, and it was pretty amazing. You look at all told what the trading volume looked like. Those 10 ETFs clocked in $4.6 billion of turnover. Most of that came from the Grayscale Bitcoin Trust, $2.3 billion. That's a little bit of a funky situation because that has existed in a trust structure since 2013. So it had all of these built-in assets. So you were expecting a big bump from GBTC converting. But even, outside of just GBTC, to see almost or approaching $5 billion of turnover, that was pretty breathtaking.
Now you're saying all this, but then we're looking at it now. Has it faded? How would you describe about what's going on today?
Well, if you take a look in terms of Bitcoin's price, for example, as I understand it, let's pull it up right now. Bitcoin not having a great day, currently approaching down 6%, below 44,000. What happens next is really exciting because the question that everyone has been asking.
We're going to tie these to futures, right? Or what's the next step here?
Well, futures ETFs have already Bitcoin futures backed ETFs. We're talking about future.
We're going to talk about derivatives, I guess.
Yes.
Okay.
Yeah. The next step would be that options begin trading on these spot Bitcoin ETFs. But if you think back to when the Bitcoin futures backed ETFs launched in October 2021, it was the ultimate sell the Bitcoin futures, $69,000 a coin. In the aftermath of those ETFs launching, there's been a lot of questions as to whether we were going to follow the same script this time around, and it kind of makes sense that you're seeing Bitcoin fall in the aftermath of this much anticipated debut, given that there's just so much interest in it.
With the debut, we also had something of a price war, at least a fee war among the majors. What happened there?
We, in the words of Eric Balchunas from Bloomberg Intelligence, questions. We had about 2 years of a fee war condensed into just a couple of days. Issuers were already cutting prices on these products before they even got out the gate. And we're talking about extremely low numbers. I mean, the lowest price was Bitwise's spot Bitcoin ETF at 20 basis points. I believe Franklin Templeton one up them just today and is now 19 basis points. So we're just seeing this march lower and lower, and there's a lot more urgency to this fee war. I mean, fee wars are really common in the ETF industry. This one is a little bit different, a little bit more urgent because all of them launch at the same time, and they all hold the exact same thing. So how do you stand out? And the answer so far seems to be by just trying to offer the lowest price possible.
And some of them are doing it only for a few months, and then those fees start to kick in.
That's the other thing. That's one of the sort of marketing gimmicks that's come about is that, a lot of the issuers are just waiving fees altogether for the first 6 or 12 months. Invesco, BlackRock, ARC 21 shares are some of the firms that are doing that. That's an interesting move because if you think about the bull case for these products, who's actually going to buy these spot Bitcoin ETFs, the answer has been RIAs, it's been those sort of institutional players who maybe didn't want to handle the futures funds, and they're not going to go out and buy Bitcoin, just direct Bitcoin. They don't really care about waivers. What they're really concerned with is the eventual fee, since that's what they'll be charging year after year after year. The fact that they're waiving fees suggests that perhaps these issuers have just pure play retail in mind. People just buying this in their brokerage accounts.
Okay, so if mom and pop want to dip their toe in the waters, is it safe? Are the guarantees there from the regulators?
I'm not sure how to opine on that. I will say the fact that the SEC finally gave
And it's
their
not
blessing.
it's not like you're putting your Bitcoin or your money with a platform like FTX.
Well, so you think about all the issues with FTX that would be avoided by the fact that, these are spot Bitcoin ETFs. And when it comes to, having to deal with, digital wallets, things like that, storage, having to manage your keys, that is all taken out of the equation. That's being handled by the issuer. So that removes that headache. And that's why, a lot of advocates have been saying this is a game changer, that this will open up a new class of investors to come into Bitcoin. Maybe they haven't wanted to worry about all of that, all of the technicalities, and now they don't have to.
Now, you have a lot of reaction from people that you talk to, too, in the business. What's the reaction? I mean, are investors getting involved? I read something, was it yesterday or the day before, that Vanguard said, you know what, we're not going to put this on our site. So what's the reaction that you're hearing?
Vanguard is an interesting one. And some of the brokerages saying no, Vanguard sort of leading the way there, has been really interesting to watch. I will say Vanguard, if you know Vanguard's personality as a firm, it's not too surprising. I mean, a few months ago, I asked them, you haven't filed for a spot Bitcoin ETF application. Do you have any plans to? And they said, no, absolutely not.
Right,
so probably not surprising. We'll see if some of the other brokerages follow suit. I mean, they're available. They are trading on a lot of the brokerages, Schwab included at this point. So it'll be interesting to see if some of the other brokerages follow Vanguard's lead or they take the Schwab route.
Okay, minute left. What's the next big event in crypto land?
I'm really looking forward to the 3-day weekend. I gotta say, that'll be
that's
pretty
not
fun.
crypto land. That's you.
In crypto land, we haven't gotten full flow data for these funds. That will probably take until later today or Tuesday. We know the trading volume was really high. It's gonna be interesting to see what that actually translated into in terms of money coming into these funds.
Don't you love it? She was just like standing out in the hall. We needed a guest.
She did.
There's Katie. Grab her.
I was about to call my mom, but this works too.
Tell her we said, yeah, right. Katie Greifeld, everything a Bitcoin ETF. Let me give you a couple of quotes. The iShares Bitcoin Trust today, down 5.75%. What's the other big one? We'll do the Grayscale Bitcoin Trust. That's BTC. That is 6% lower right now. As for Bitcoin, that is down 5% right now, 43,839 per token. You're listening to Bloomberg Markets. I'm John Tucker along with Lisa Mateo. And right now, let's get an update. Company news. And for that, here's Steve Rappaport.
John, we have shares of Citigroup down now less than 1.5%. That's after the firm announced it will eliminate 20,000 jobs. The cuts are part of CEO Jane Fraser's strategy to boost returns. Citi expects to save $2.5 billion. But in the meantime, the firm will incur as much as $1 billion because of severance and expenses related to Fraser's overhaul. BlackRock makes a big play for a piece of a growing market. Bloomberg's Denise Pellegrini has details.
BlackRock has agreed to buy Global Infrastructure Partners, or GIP, for about $12.5 billion. And BlackRock will pay $3 billion in cash and about 12 million shares worth about $9.5 billion at yesterday's price. And that deal is expected to close in the third quarter. This catapults the world's biggest money manager into the top ranks of investors that make long-term bets on energy, transportation, and digital infrastructure. The acquisition of GIP, which manages about $100 billion, is the biggest deal in more than a decade for BlackRock. Denise Pellegrini, Bloomberg Radio.
Thanks, Denise. Shares of BlackRock down less than 1%. The U.S. government is stepping up scrutiny of two telecom companies. Bloomberg's Gina Cervetti reports.
The EPA is ramping up its inquiry of telecom giants AT&T and Verizon after an investigation found that old lead-covered cables had contaminated waterways and soil in parts of the U.S. A trade group that represents both companies said test results continue to show that telecom lead-covered cables pose no significant public health risk.
Thanks, Gina. Shares of AT&T and Verizon stock are up less than 2%. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
right, I'm John Tucker, along with Lisa Mateo and for Matt and Paul. We look at markets right now. S&P 500, 6 points lower. That's down about 0.1%. 40.73 on the index. The Dow Jones Industrial Average, 204 points lower. The NASDAQ 100 is down 23 points. That's down about 0.1%. And it is 11:55 on Wall Street. Right now, let's get an update. World and national headlines. Amy Morris is in Washington. Good morning, Amy.
Thank you, John. The U.S. and U.K. have launched dozens of strikes on Houthi targets in Yemen in a bid to stop the Iran-backed group's shipping attacks in the Red Sea. Bloomberg's Bill Ferries with more.
It looks like the U.S., U.K., and their allies hit more than a dozen sites, targets in Yemen, believed to be used by the Houthi rebels for everything from like radar facilities to weapons depots, places where drones could be assembled and stored for launch, as well as sites holding ballistic missiles.
Bloomberg's Bill Ferries reporting there. The Houthis appear undeterred. They say all U.S. and U.K. interests are now legitimate targets and the strike is imminent. House Speaker Mike Johnson defied a rebellion on his right flank. He says he'll stick with the spending deal that he made with Senate Majority Leader Chuck Schumer.
Our top-line agreement remains. We are getting our next steps together, and we are working toward a robust appropriations process.
Now, this move lowers the risk of a government shutdown, but it does threaten to jeopardize Speaker Johnson's grip on the speakership. The House will vote to hold Hunter Biden in contempt of Congress next week. Republican Majority Leader Steve Scalise making that announcement. The president's son defied subpoenas to testify behind closed doors. He has offered to only testify publicly. A polar vortex is about to unleash an Arctic blast across much of the U.S. over the weekend. Some of it's already hitting Iowa. Bloomberg meteorologist Rob Carolyn is tracking this.
Low pressure continues to lift out of the central United States. It'll produce rain across the Ohio River Valley, the deep south, and also the Gulf Coast. Some of the storms in the Gulf coastal region and also over the southeast may be strong as the day goes on.
Bloomberg meteorologist Rob Carolyn tells us there's also snow with this system, and blizzard warnings are in effect from Minnesota into Illinois. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. John and Lisa.
All right, Amy, thanks very much. Appreciate it. It is 11:57 on Wall Street. I'm John Tucker, along with Lisa Mateo. We're in for Paul and Matt. And what do you have for us, that big smile of yours?
This is what we're talking about. So we had a couple of talkers. This is a new trend, okay? So sleep unders are the new sleepover, okay? So they're also called lateovers. Here's the problem, okay? Parents.
Is this some sort of politically correct thing you're talking about?
No, it's parents.
Because I've had my fill, Lisa.
I'm sure you have. No, they're getting anxious about their kids staying in someone's house to sleep over. I personally was one of those. I was not allowed as a kid to sleep over anyone's house. I kind of passed that on. My kids, they're not allowed.
And look how you turned out.
Yeah, I'm okay.
I didn't say that.
But I was the hated mom because I always had to drive up and, pick up my kid before the sleepover was over. So
just when the fun was getting started, you got to come home.
I'm sorry. It's how I grew up. So a lot of parents, so what are they worried about, right? They're worried about gun safety. A lot of people talking about that's a new conversation you have to have when you drop someone at someone else's house, when you drop your kids off. Technology use. So they're picking up their kids early. Here's something else, a new trend, John. It's called a mommy and me sleepover. So the moms come and they sleep over with the kids. So that's a new trend.
Does that mean like dads like me get a rest?
Yeah.
Because if that's the case, I'm all for it.
He's all for it. Of course you are. But so the experts are saying the sleepover gives kids this opportunity for some real independence. The parents get the night off if you do the sleepovers. The parents who are overly, though, cautious with sleepovers are usually overcautious with other things, and that can lead to anxiety problems for the kids. That's another side of it. But, each kid is different. Some kids don't even like sleepovers. So.
Well, that's the highlight of in my family. Yeah. The oldest one didn't want to do it. The youngest one was out the door with her little backpack, saying goodbye.
She's ready to go.
See you in a week or
She's
whatever.
Had it with you.
Another
Sleep
thing to worry
unders,
about.
John.
Sleep
Sleep
unders.
unders.
All right, I'll try to keep that in mind. S&P 500 right now, 7 points lower. You're listening to Bloomberg Markets.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And good afternoon. This is Bloomberg Markets. I'm John Tucker, along with Lisa Mateo. We're in for Paul Sweeney and Matt Miller. And as we wrap up the trading week, we've heard from some of the major banks. The earnings picture presenting a stark contrast between J.P. Morgan Chase and everybody else. Oil higher as Houthi rebels promise a response to U.S. and U.K. missile strikes. Bond yields lower after today's producer price index coming in lighter than expected. 47.96, Lisa. That's the magic number on the S&P 500. Still a ways away from that at this point. Keeping a close eye on the record we set 2 years ago. Let's start off with your market update, and to do that, here's Charlie Pellet. Hi, Charlie.
Well, hello there, John Tucker, and here's what's going on. We've got the Dow, the S&P, NASDAQ all in the red right now. Treasury 2-year yields hitting the lowest since May as an unexpected decline in producer prices reinforces bets on Federal Reserve rate cuts this year. S&P right now down 8. That is a drop of 0.2%. We got the Dow down 220, a decline of just about 0.6%. NASDAQ down 0.4. NASDAQ 100 index lower by 0.2%. 2-year yield at 4.15% with a 10-year 3.95%. Gold up $18 the ounce right now at $20.47, a gain of 0.9%. We've got Bitcoin now slumping 5.8%, 43,502 on Bitcoin. Crude, major story. Brent crude now at $78.40, up 1.3%. West Texas Intermediate crude traded here in New York, $72.89. That is a gain of 1.2%. Bank stocks front and center for the most part. In fact, they are all lower right now. J.P. Morgan Chase after earnings down 0.4%. Citigroup after earnings down 1.4%. Wells Fargo after earnings down 3.3%. And Bank of America now lower by 2%. Citigroup, by the way, says it will be eliminating 20,000 roles in a move that will save it as much as $2.5 billion. Bloomberg's Allison Williams, an analyst, bank analyst with Bloomberg Intelligence, has been breaking down the numbers, and she was a guest this morning right here on Bloomberg Markets.
I think the most important takeaways are things looking more positive for J.P. Morgan and less so for Wells Fargo, and that's a combination of the net interest income outlook as well as the cost outlook.
And again, JPM down now by 0.4%. She alluded to Wells Fargo down now by 3.3%. And yes, you can hear more of that conversation on the Tape Podcast. You can download it wherever you get your podcasts. I'm Charlie Pellet. John and Lisa, that is a Bloomberg Business Flash.
All right, happy Friday, Charlie. Thanks a lot. Let's get a look under the hood now. Stocks on the move, companies to watch. Bloomberg equity reporter Nora Melinda joins us right now. And I'm looking at the laggards in the S&P 500. Almost all of them are airlines.
Yes. I mean, it feels like the broader market has been all over the place today, especially with PPI and as investors are really digesting all of this data from bank stocks. But the one thing that has pretty much remained consistent has been airline stocks. They are the biggest laggards by percentage in the S&P 500 today. That's mainly led by Delta. Some Delta earnings came through with Delta backing away from its 2024 profit target as persistently high costs counter the gains from a rebound in international travel.
Now they also had, isn't Delta also like they did an order to place Airbus? They had a big Airbus order too.
Right.
So, I mean, how does that react as far as shares? I mean, does that affect it at all?
I mean, I think that like a lot of things have really been in focus for Delta and airlines more broadly. Of course, like we're looking at like these higher fuel costs, like that's really been weighing on Delta and along with a lot of these other names. Boeing backlash and all of that's been happening with over the past week has also been weighing on the sector more broadly. So I think that like this is really something to watch as we progress through the session today, but seeing them as the biggest laggards is really interesting as you think about travel dynamics.
Is there any bright spot with the airlines? I mean, it's just, I know Paul's
I only bring bad news.
All right. Speaking of bad news, let's move on to the next stock.
Yes.
United Healthcare shares Tumbling right now.
Tumbling.
518.36 down 21.32.
Yes. United Health, that's falling kind of right behind these airlines, down as much as 4.9% today. That's the most since June. Health insurance stocks are tumbling after the industry leader United Health reported higher medical expenses than analysts had initially expected. And this is major news for the sector, just simply off of the fact that it's a sign to investors that the sector may not have accurately priced in for how many people are getting medical care now, that many of the general public essentially aren't thinking as much about COVID and a lot of these other things that would have obviously benefited these health insurance names.
So what are they? Is it higher care expenses? Or
Yes, I mean, like executives at United Health did say that they planned for things like seniors getting orthopedic and cardiac procedures to persist. But a year-end uptick in costs driven by RSV vaccinations and COVID care doesn't appear to be durable or relevant for the rest of the year. That's the CEO that said that. So those shares are really tumbling as people kind of think about the broader landscape of health insurance companies.
And they're like the industry bellwether.
Exactly.
You know, you think-
Right. Not the best news for a Friday.
All right. For the Friday, the big news today, of course, some of the financials we got today. And one of the highlights or lowlights or whatever you want to call it, the difference between J.P. Morgan Chase and everybody else. You also had lots of cuts being announced at Citigroup, where Jane Fraser trying to reorganize that bank into something else.
Right. I mean, bank earnings have really been in focus today, and specifically, as you mentioned, Citi has really been the headline of the day. I mean, the CEO, Jane Fraser, said that it was a very disappointing fourth quarter. So, I mean, how are investors really supposed to take that? But the firm did also announce that it's going to cut 20K roles in the medium term. That should hopefully save the company as much as $2.5 billion. So we'll definitely see how that plays out. But as we mentioned earlier, these bank shares are down as everyone's really digesting the news and the earnings results as we kind of look at the broader landscape and how the financial sector is faring amid a challenging backdrop.
At 47.96, that's the number to watch on the S&P 500. I've been watching it 2 years ago. That was the record. We're at 47.73. Boy, that last mile is really tough at this point. We just can't seem to get there with that record.
So much back and forth.
I know. All right. Well, it is Friday, so that's something.
We'll see where it settles.
Nora, always good to deeper look at some of the stocks that we're following today with Nora, United Healthcare, Citigroup, as well as the banks and the airline stocks. Nora Melinda from the Stocks Group. Thanks a lot. We appreciate it. That brings us to 12:08 on Wall Street, and the Israel-Hamas war does seem to be broadening out. The U.S. and the U.K. striking back against Houthi rebels who've been targeting shipping in the Red Sea. And now the Houthi are vowing to strike back. Oil higher as a result. Let's take a deeper dive into the story. Look also at the political fallout. Wendy Schiller, professor at Brown University, joins us now. Wendy, thanks for being with us. We appreciate it. Did the Biden administration have much of a choice in its response? And what's the worry about how deeply we may or may not get involved in a broader conflict?
Well, I mean, I don't think the Biden administration had any choice. I mean, obviously, we are a major superpower, but we also have very strong commercial interests in making sure that commercial carriers can, use shipping lanes unaccosted. We've had issues with piracy in the past and other parts of the world, but this is, reminiscent of conflicts that we've had over the years, the last 50, 60 years. And it reminds voters of our dependence on foreign oil and the globalization of the energy market. And so I think that's where Biden has to sort of figure out how to sell this to the American people as important to the United States, but also to the environmentalists, talk about where we are in terms of our energy independence.
Now, when the Houthi rebels, they said they have no issue launching more attacks after this. So, how much of a threat is that? And are the Houthi our only point of concern right now?
Well, I mean, the biggest concern, I think, to the United States directly is that we do have carriers in the Gulf. We have personnel all over the Middle East, and we want to make sure that they are safe. I think that's the biggest fear the Biden administration has currently, but there are also lots of civilians who are in commercial shipping. And, the United States feels some obligation to protect
that kind of commerce. So I think these are the pressures on the Biden administration. I think we're fully equipped militarily to really, deal with any and all of the attacks. But I think they're trying to show fairly massive force early. And when I say massive, I mean joining with the UK and doing it all at once, doing a number of different strikes to limit civilian casualties, but also make sure that those that would attack the United States know that there will be a response every time they do. And that's been, I think, Obama, Trump, and Biden. I don't see a lot of daylight across any of the three presidents in that regard.
All right, let's shift gears a bit. I would imagine, Wendy, if you live in Iowa, you're of a different stock. You're kind of a hardier breed. Is the weather going to matter for the caucuses?
I think the weather doesn't matter as much as maybe those of us on the East Coast or West Coast who experience some bad weather might be deterred from getting out the door. I think that the caucuses are locally held, and so I think they are prepared for it. I think the Trump supporters and Trump himself has an advantage in that way because there's generally more enthusiasm consistently among Trump voters in the nomination process so far, particularly in Iowa, than there are the DeSantis or Haley voters. So that's the big challenge for Nikki Haley. Can she draw close enough? She'll probably lose Iowa. I think most of us agree on that. But can she actually draw close enough to say, I'm viable going into New Hampshire and really put DeSantis on the sidelines? And if she can do that with some percentage of the vote, maybe more than the 15% or 20%, maybe 25%, something like in that range, I think it makes her more viable as a candidate going into New Hampshire, as I just said. But also the broader primary season becomes more attractive for donors for Nikki Haley if she can slice out a bigger coalition for her in Iowa.
Remind me how the caucuses work. The local precinct, it's not winner take all, right?
No. It's basically people. It's in terms of the precinct. So people actually go to their precinct. It can be a school, it can be a library, it can be somebody's home, and people vote in that area for their choice, right? But the Republicans have proportional representation in their primaries, at least, going till March 15th. So this is an interesting thing people are forgetting. You can pick up delegates throughout this contest until the middle of March. So even though Trump looks like the big front runner, we don't get to winner take all for a couple more months. So that means people like Haley and DeSantis can pick off or collect delegates. And I think that makes a difference, at least in the next couple of weeks.
So if you can, let's dig into the economics a little bit of this. So like we do, we have the election year. We have the war in Ukraine. We have the war in Gaza. How is this affecting the markets? If you can just dig deeper into the market reaction from all of this put together.
Well, I mean, I think the question is consumer confidence in both government, but also in market predictions, because, there was supposed to be a recession, didn't really turn out that way. We have maybe a soft landing, maybe there'll be a little bit more of a slowdown, but we've seen a very healthy job market just last month. So the question is, who are we going to believe? The same kinds of forces that have infiltrated politics in terms of misinformation, perception, partisanship, the lens of looking at the economy through partisanship, will start to affect people's trusting of economic predictions and the market. At the very high elite levels, not. But for people who are thinking, do I put my money in a savings account in a bank that I know, or do I put it in the stock market? The bank that you know is becoming far more attractive given interest rates than the amorphous stock market. So I think that people who do watch consumer behavior in terms of the stock market have to pay attention to what's happening in politics now in terms of credibility to figure out where people will actually end up putting their money as we go forward this year.
One of his cases, Donald Trump, showed up yesterday, kind of turned it into a political rally of sorts. Is there any degree that you can sense of maybe, as he makes all these appearances in court usually, that there's some Trump fatigue?
I think we're seeing the opposite, and I have been surprised by that trend. But the opposite in terms of his core supporters. There is no bad publicity in Trump's world, in Trump's mind. Every single opportunity to present himself and make his case, he takes. And he takes with vigor and energy. And these are the kinds of things that are frustrating to the Biden campaign. So he will now get the kind of free press, even if we all think maybe it's bad press, but he thinks it's good press, good opportunity, and he'll get the same kind of free press he got in 2016 when everybody covered him. And I think that's what he's looking for. Will there be Trump fatigue 3 or 4 months from now among independents and suburban voters who have not yet committed in their choice for 2024? That's the big question mark. The more we see it here from Donald Trump in what we call the mainstream media, do we get more tired of Donald Trump? He's betting the opposite, at least for the primaries, to shore up his base. Once we get to the summer, I think that's where we really have to take a look at whether people are going to choose Trump and all that Trump brings versus right now Biden. And that's where if we're going to see Trump fatigue, we'll start to see it then.
Okay, what's the gap between undecided versus his core supporters?
So let's just say maybe there's, the Republican Party, you'll do polls and people say they'll vote for Trump, but essentially there's about 38 to 40%, as we saw in the primaries in 2016, and might see again, of support for Donald Trump that's unwaverable, that they will not budge. So it does leave open the possibility of winning the nomination, but those people are Trumpers and they're never going to sway and they're never going to defect from Trump. But there's still a lot of open GOP people. And also there are primaries that are open to independents to register, like New Hampshire, where you can register to vote in the Republican primary. So a lot of states have that opportunity. That's what could swing these Republican primaries. Not the closed primaries of the type that are typically in places like South Carolina, but the open primaries or semi-open where you can register as a Republican and then vote in that primary. If independents choose to do that, that is what the Haley campaign is counting on to make her competitive as we move forward.
And before we go really quickly, Biden's running mate. There's been different talk. I know you might mention it too. Kamala Harris still sticking with him on the side, or is he going somewhere else?
Yeah, I've said before that picking somebody like Raphael Warnock, who won in Georgia 4 times technically, and who certainly in terms of making sure that you stay loyal to your promise to the African-American community, to pick an African-American candidate, Biden said woman candidate. But nonetheless, that's somebody who can make Georgia competitive. Right now, Georgia won't be competitive, I don't think, in 2024. There's nobody on the ballot that really will generate Democratic turnout. So my proposal has been that if he is faltering generally in ways that are sort of systemic against Trump by the summer, by the convention, there could be a shift in who he selects as his VP.
Wendy, always a pleasure. Appreciate it. Thanks for the update. Wendy Schiller, professor at Brown University. Let's look at the markets right now. S&P 500, 4 points lower. That's down 0.1%. Not a lot of movement today. 47.75 on this Friday. The Dow Jones Industrial Average is 188 points lower, and the Nasdaq 100 down 16 points. Some of the real action taking place in the bond market. The 2-year yield 7 basis points lower after that PPI coming in lighter than expectations. Right now at 4.16 on the 2-year. The 10-year yield pretty much unchanged, under 4%, 3.96. You are listening to and watching Bloomberg Markets. I'm John Tucker, along with Lisa Mateo. And it brings us to 12:18. Time for an update on company news. And with that, here's Steve Rappaport.
John, big cuts are coming at a big bank. Citigroup plans to eliminate 20,000 positions. That move is part of CEO Jane Fraser's strategy to save money and boost returns. Bloomberg's Shanali Basak reports.
We already know there are costs tied to extraneous items in different parts of the world, parts that are largely exiting. This is Jane Fraser's year. This is the year she has to bring the turnaround story to Wall Street. And remember, we have to see what that is in terms of those markets and investment banking businesses.
That's Bloomberg's Shanali Basak reporting. Shares of Citigroup are currently down less than 1.25%. Mishaps with Boeing and Japan Airlines are drawing fresh scrutiny from the airline industry and safety procedures. Bloomberg's Amy Morris reports from Washington.
Current regulations require airlines to be able to evacuate an entire plane of passengers in just 90 seconds in an emergency. But skeptics argue enforcement is lax because simulations don't account for disabled passengers, children, or obstacles. Senators have already called for oversight and a hearing on the Boeing 737 MAX 9 door plug failure. In the meantime, lawmakers want Congress to act on a 5-year bill, reauthorizing the FAA before that expires on March 8th. In Washington, Amy Morris, Bloomberg Radio.
The brewer of Budweiser is going for gold. Anheuser-Busch InBev is tapped as a sponsor of the Olympic Games. The company's non-alcoholic Corona Cero will be the global sponsor for Olympic events through 2028. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red on the final trading session of the week ahead of a long holiday weekend. We've got the S&P now lower by 1 point, little changed at 4778. The Dow down 164, drop there of 0.4%. NASDAQ lower by 10, a decline of 0.1%. NASDAQ 100 index, little changed as well, down 6 points right now, with the Russell 2000 down 5, a decline there of 0.3%. 10-year yield 3.95%. We've got spot gold now at $2,043 the ounce, up $14, up 0.7%. Cannot ignore the move in Bitcoin today to the downside, tumbling 6.1%. Bitcoin now at 43,318. Crude oil, West Texas Intermediate, up 0.8%, 72.63 a barrel. BlackRock has agreed to buy Adebayo Ogunlesi's Global Infrastructure Partners for about $12.5 billion, vaulting the world's biggest money manager into the top ranks of investors that make long-term bets on energy, transportation, and digital infrastructure. BlackRock CEO Larry Fink spoke about the deal this morning with Bloomberg Radio.
I think we have the business strategy down. I'm confident we are in the early part of this infrastructure revolution, and we wanted to have the scale. We wanted to have the expertise, the operational expertise of GIP, marrying that expertise with BlackRock's global relationships with companies and governments, marrying our existing expertise in decarbonization and infrastructure. It's a perfect partnership.
And on a down day for U.S. markets, we are seeing BlackRock shares advance. BlackRock right now up by about 0.1%. So again, recapping, down day for U.S. markets. The Dow, the S&P, NASDAQ in the red. S&P down 2, drop there of less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pella, thanks for the update. We appreciate it. I'm John Tucker along with Lisa Mateo. We are in for Matt and Paul. And let's take a deeper dive into these markets today. What stands out to me right now, Lisa, is the two-year Treasury, which is more policy reactive. That's 7 basis points lower, 4.16. That would be just around the lowest since May. An unexpected decline in producer prices, reinforcing bets the Federal Reserve cuts rates this year. Of course, it comes after the hotter-than-expected CPI figures we got yesterday. Let's get the macro view now. Phil Orlando, Chief Equity Strategist with Federated Hermes, joins us. Phil, good to talk to you. Take your pick. What narrative have you latched onto?
There are many from which to choose. I'm less inclined to look at the PPI, the wholesale inflation this morning. Yesterday, CPI, critically important, and then the personal consumption expenditure index coming up later in the month. So looking at yesterday's CPI, that number was just much hotter than expected. November year-on-year nominal was up 3.1%. December, 3.4%. And that was a couple of ticks higher than expected. So what you look at what the Federal Reserve has been doing, you've got some investors out there, frankly, I think the consensus is expecting the Fed to cut rates 6 times over the course of this year, with that first cut coming in the month of March. We just don't see that. Given how hot inflation still is, we think the Fed is going to be patient, vigilant, try to make sure that inflation is heading down to their 2% core PCE target. So we're looking at a couple of rate cuts in the back half of the year, not 6 that are starting in the month of March.
Now, what about recession thoughts? Are they on the back burner?
We are officially in the soft landing camp. That said, we still expect the economy to slow materially over the course of the next year or so. So you look at this fourth quarter that's going to get flashed in about 2 weeks. We're at 1.5% GDP growth. That compares to the third quarter at 4.9%. That's a pretty significant decline. And then as you look at, say, the first 3 quarters of this year, we're going to be limping along, we think, at about a 1% run rate. So the Federal Reserve, in our view, has done exactly what it intended to do Over the last 2 years, they took the funds rate from 0 to 5.5%. They cut their balance sheet from $9 trillion to, $7.7 trillion. They were hoping to see the economy slow, the rate of unemployment increase a little bit, inflation come down materially, and all of that's playing out. At this point, I think they just want to be, very careful, very cautious, very patient to make sure that inflation is sustainably moving down to their target. I think they'll come to that conclusion by the time we get to, say, the July FOMC meeting.
I don't want to get too wonky, but I'm still having a little trouble wrapping my thoughts around the shelter component and how that specifically is measured and whether it really is accurate at this point.
Well, we can discuss or debate whether or not it's accurate or not, but here's the big picture. That inflation peaked last year and is coming down. No question. Full stop. But you look at the housing market, and in calendar 21 and calendar 22, housing prices in the United States went up by 50%, 50%. So while it's absolutely true that inflation is generally coming down and that housing prices have sort of peaked here, we're not seeing a 50% decline in housing prices. And the investment that we make as individuals in our homes, for a lot of us, is the most significant investment that we have in our personal portfolios. I think that's weighing on consumer attitude and consumer mentality, and then that translates back into the rental component of the CPI calculation, which accounts for about 40% of that number. So it will come down and wash itself out over time, but it's not going to happen tomorrow. And to some degree, that's creating some of the noise and some of the stickiness in the data.
So with all that said, Phil, CPI, PPI, how are you changing your strategy moving into 2024?
So we sort of made that change back in late October. When the S&P 500 got to that 4,100 level, we felt that that was dramatically oversold, and we felt that we could get to the 4,800 level by the end of this year, the 5,200 level by the end of calendar 24. And we felt that the rally last year was disproportionately driven by the Mag 7, and we felt that there was going to be reversion to the mean there. So what we wanted to do, and we're maintaining that strategy now, is look at the sectors of the market that had been left for dead, that we felt would finally find some love. So domestic small cap growth, domestic large cap value, and international are the areas that we think are going to be the winners in the fourth quarter of last year and over the course of calendar 24.
All right, your view overall of technology in the new year, and then since we got their earnings today, the financials.
So, growth stocks, technology stocks are still great companies. I'm not going to tell you that Google or Softy or Nvidia are bad companies. They're not. The question is that valuations may have gotten a little bit ahead of themselves in terms of all of the AI FOMO that we experienced over the course of last year. So at this point, we are slightly underweight growth in technology, but we're not zero. We're maintaining a slight underweight position. Financials are one of the areas that we really like, along with energy and healthcare. Those were areas you look at financials, for example. This time last year, first quarter of last year, those stocks were absolutely obliterated based upon the problems with the commercial real estate market. A lot of those stocks were down 50%. They sort of double bottomed in the fall and then have started to come back up. So there's a lot of catch up that has to happen there. And you look at some of the quality numbers, for example, it came out of JP Morgan this morning. We think financials are a sector that's probably going to do pretty well over the course of this year as they sort of get back on trend in terms of valuation.
Phil, disinflation, good for markets or not good for markets?
I think everyone would be happy to see the Fed hit their core PCE number at 2%. But here's sort of the interesting thing. We're rapidly approaching that number. And by our count, we could be there by the end of this year or the beginning of next year. But you look at the Fed's latest SEP, the Summary of Economic Projections, that they published just in the middle of December. They're telling us that they're not confident that we're going to get to that 2% level until the end of calendar 2026. That's 3 years from now. So where's the disconnect here? Is the Fed being too conservative, or do they know something that we don't know? That this last mile, so to speak, on getting to that 2% target is going to be like hand-to-hand combat. And they're taking a very prudent, very patient approach just to make sure that things are moving in the right direction.
All right, unfair question time. Year-end S&P 500 target.
Not unfair. 5,200 is our number.
Okay. We're right now at 47.76. Also, still waiting for that.
We think we're going to be up 8 or 9% over the course of this year, which is a very modest year compared to the 24% gain we saw last year.
Phil, always a pleasure. Appreciate it. Happy Friday. Have a great weekend. Phil Orlando, Chief Equity Strategist with Federated Hermes. And as we look at the markets right now, S&P 500, 4 points lower, at least 47.75. Dow Jones Industrial Average is down 198 points to wrap up the week, down about 0.5%. The NASDAQ 100, 13 points lower. That's down just a little less than 0.1% right now. Again, I'll go back to the yields. The 2-year after the PPI this morning, 8 basis points lower. The yield down to 4.16. The 10-year, 1 basis points lower. That is down below 4% at 3.95. This is Bloomberg. And it's now 12:33 on Wall Street. It's time for a look at world and national news. Let's head to Washington right now. And Nancy Lyons of Bloomberg News. Hi, Nance.
Thanks, John. Yemen's Houthi rebels are vowing to retaliate for American and British airstrikes against them. The U.S. and the U.K. took aim at more than 60 Houthi targets in 16 locations overnight across Yemen. The bombing was in response to the Houthis' campaign of drone and missile attacks on commercial ships in the Red Sea. Norman Rule, a former intelligence officer now with the Center for Strategic and International Studies, says it's unclear if the situation will now escalate.
We hope it's a one-off, but that's really up to the Houthis. I think what we have to look at is whether a Houthi counter strike will be symbolic, meant to show defiance, or really something that indicates that they haven't got the message. If the latter is the case, there will certainly be a broader strike by the United States, probably the United Kingdom. But again, it'll be carefully calibrated to move up the escalatory ladder.
Norman Rule spoke with Bloomberg Surveillance. The Biden administration is rolling out another pathway to debt relief for certain student loan borrowers. The program targets people who took out less than $12,000 as their initial student loan balance and have been paying it down for 10 years. Education Secretary Miguel Cardona outlined the details on ABC's Start Here podcast.
For those who have borrowed either $12,000 or less, after 10 years, they would be receiving loan forgiveness. But we were going to roll that out in July of this year, and eager to do that. But instead, we're going to be rolling it out today.
Cardona says the Education Department will start automatically discharging debts next month for people who qualify and are already enrolled in SAVE, which is an income-driven repayment plan that was rolled out last year. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower, a little changed, with the S&P 500 index right now down 4 points, down less than 0.1%. Dow Industrials down 184. That is a drop now of just about 0.5%. NASDAQ, the composite index, down 19, decline there of 0.1%. NASDAQ 100 down 15, a drop there of 0.1%. 10-year yield 3.95%. The 2-year 4.16%. Gold up 0.7%, $20.42 the ounce. Crude oil very much in focus. West Texas Intermediate crude higher, up 0.7%, $72.51 a barrel on WTI. Cannot ignore Bitcoin today. Big move to the downside, now lower by 5.7%. Bitcoin at 43,549. Treasury 2-year yields hitting the lowest since May as an unexpected decline in producer prices reinforces bets on Fed rate cuts this year. Right now, the 2-year 4.16. But what about the U.S. economy skirting a recession? That question moments ago for Phil Orlando, Chief Equity Market Strategist at Federated Hermes, who was interviewed right here on Bloomberg Markets.
We are officially in the soft landing camp. That said, we still expect the economy to slow materially over the course of the next year or so. So you look at this fourth quarter that's going to get flashed in about 2 weeks. We're at 1.5% GDP growth. That compares to the third quarter at 4.9%. That's a pretty significant decline.
And by the way, Phil Orlando told us he has got a 5,200 year-end target on the S&P 500 index. To put that in context, 47.73 right now on the S&P. Bank stocks lower after earnings across the board. J.P. Morgan Chase down 0.6%. Citigroup down by about 1%. Wells Fargo down now by 3%. Bank of America after earnings down 1.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. You're listening to Bloomberg Markets. I'm John Tucker, along with Lisa Mateo. We're in for Matt and Paul. Let's move on to our next story. It has to do with the oil, the energy complex. Oil tanker owners, they stopped sending their ships through the southern Red Sea today. This comes after the U.S. and U.K. airstrikes in Yemen. This is the clearest example yet of disruption to petroleum flows since Houthi militants began attacking commercial vessels there. And right now, as we look at oil, Brent crude, the international benchmark, 68 cents higher, 78.09. Let's take a deeper dive now with our next guest. Ben Cook is manager of the Hennessy Energy Transition Fund, discussing the outlook for energy investing this year amid the geopolitical uncertainty. I got to tell you, Ben, I would have thought that the price of crude, especially the international benchmark, would be higher. Right now, it's still under 80. Well, what's your view?
Yeah, good afternoon, John. Thanks for having me. Look, I think given the geopolitical flashpoints we see around the world, Russia, Ukraine, the Middle East, what we're seeing in the Red Sea, obviously there is a bit of a geopolitical risk premium now in the price of crude. I think the important thing to recognize here today is that even though those headlines would imply a disruption to trade routes, we haven't seen a tangible loss in output, and without any significant magnitude of crude oil coming off the market, the price obviously will respond positively to headlines, but again, without the loss of supply or disruption, it's hard for crude to maintain those elevated levels.
So with all that said, are energy equities still attractive?
Lisa, yeah, we think they are. 2024 stands to be a pretty good year for energy, in our opinion. We think the global economy will grow. Our views in line with consensus. Global GDP should rise on the order of 2.5%. And that would imply an increase in the appetite for crude oil. We think demand should grow on the order of 1.5% to 2% this year. And importantly, on the supply side, we think that non-OPEC sources will moderate. Growth out of the U.S. will moderate. And as a result, that'll provide some cover to OPEC to bring some volumes back to market. And that's important because as they do, that will diminish the spare capacity that's available on the market. It should provide some buoyancy to global crude oil prices. We anticipate by the back half of the year, we'll see WTI back above the $80 per barrel range, and that should set up nicely for energy investors in energy equities.
Are we going to see more consolidation in the industry, particularly when it comes to the shale play?
Yeah, John, I think we will. To date, we've seen a number of significant deals: Exxon, Pioneer, Chevron, Hess, more recently Chesapeake, Southwestern. What we're seeing is a consolidation of acreage in some of these premier shale plays in the U.S. lower 48. And as the industry continues to pursue productivity gains that come with increased scale, obviously cost efficiencies that are an additional benefit, the elimination of redundancies across management teams, I think there will be good financial incentive to continue to pursue M&A in the shale patch here in the U.S.
How many shale fields are left?
The major shale plays make up probably 5 to 6 key basins. The Appalachian Basin for natural gas, of course, the Permian Basin in West Texas and eastern New Mexico, Eagle Ford Shale, DJ Basin, Bakken. Those represent the biggest shale plays. And importantly, in those plays, there's still a significant number of public and private operators that could become viable targets for consolidation.
But not sure if this is in your wheelhouse, but where does the FTC stand, on these deals, with oil and gas deals?
Yeah, what we've seen, the regulatory authorities actually move to request additional information on both the Exxon Pioneer deals and the Chevron Hess deals. I think that's going to continue to be an issue. The reality is that once they dig deeper, they'll realize the concentration in market share power is de minimis compared to the overall market for these commodities. And so we wouldn't expect, a significant impediment to these transactions getting consummated.
At the end of the day, I don't put crude oil in my car. I put in a refined product. And what's the outlook there? Because we're still under, in my neck of the woods, $3 a gallon. And that's got me smiling, Ben. What are the factors that go into that, even as we see crude oil prices rise?
Yeah, great question. Refined products, obviously, they're a global market, and just as they are for crude, and the supplies of those refined products, the inventories, and the demand and supply for on a real-time basis for refined products such as gasoline and diesel, jet, et cetera, that's going to have an impact on pricing. We've seen a decline over the last several months in refined product pricing, and as that's been a function of rising inventories. We've seen gasoline inventories migrate back toward historical seasonal averages, and so that's why we've seen the price of gasoline come down. On the heating oil distillate side, we've seen inventories remain at depressed levels, and that's true on a global basis. Heating oil and diesel prices should remain elevated as the refining industry works to replenish inventories of those categories of refined products. But again, going back to our view on global demand, if we anticipate the rate of growth globally in terms of GDP, we would anticipate an increased appetite for refined product consumption as well. And that should push pricing a bit higher as we move towards the balance of the back half of the year.
A quick 30 seconds, Ben. Who are you liking right now in the energy space?
Yeah, we do have a preference for traditional hydrocarbons in that category. We like companies that have attractive asset bases with low cost structures that tends to afford a resiliency in volatile commodity markets. Companies that possess balance sheets that are improving, and of course management teams that are strong. The companies that combine most of those favorable elements would include ExxonMobil. They've generated decent results in the upstream with exploration success in Guyana, and they're certainly buying back a significant number of shares. ConocoPhillips also falls into that category, another upstream company, as well as Cheniere Energy, which is a major exporter of LNG here from the United States.
Ben, thanks for stopping by today. Appreciate it. Ben Cook, manager of the Hennessy Energy Transition Fund, his outlook for energy investing in 2024. As we look at Brent crude, up 84 cents, up about 1%, 78.25 a barrel. NYMEX crude up 9/10 at 72.69. This is Bloomberg. And that brings us to 12:50 on Wall Street. Let's get an update on company news. And with that, here's Steve Rappaport.
John, you were talking about the price of oil being up. So are shares of ExxonMobil, BP, and Chevron after the U.S. and U.K. launched strikes on Houthi rebels in Yemen. More on that from Bloomberg's Bill Ferries.
People have been greatly worried that the Israel-Hamas war would expand into a regional conflict. There will be people who look at this and say it's more sign that this is closer to dragging Iran into it. Iran has been a big supporter of the Houthis. It remains to be seen whether they can resupply those Houthi rebels at all, given the military firepower still amassed in the Red Sea. But it certainly brings it one step closer to this becoming a much broader conflict.
Bloomberg's Bill Ferries reporting. Citigroup is cutting 20,000 jobs as part of CEO Jane Fraser's strategy to boost returns. The latest from Bloomberg's Shonali Basak.
Jane Fraser, we know, inherited a bank that was bloated, that had regulatory issues, and that had many layers of bureaucracy that she is now taking an absolute axe to. Investors have largely rewarded her moves to do that, though it'll take a minute to get through all those layers of management. Now, that is the fixing story, but where does she get competitive in those Wall Street businesses? And also, I'm looking at cost of credit as well.
That's Bloomberg's Shonali Basak reporting. Faster than the speed of sound, NASA and Lockheed Martin this afternoon will unveil a supersonic jet that can top 900 miles per hour. The inaugural flight of the research aircraft is expected this year. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
Hey, you're listening to Bloomberg Markets.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And I'm John Tucker in for Paul Sweeney. As we wrap up the trading week, right now the major averages, they are unchanged to lower at this point. S&P 500 up just barely, 47.80, 47.96. That was the number to watch. That was the record that we set. The record closed 2 years ago. Dow Jones Industrial Average is down 152 points. Let's right now get an update on news from around the world. And for that, let's head to Washington. And that's where we find Bloomberg's... Oh, I'm sorry. We're not going to go to Washington for world and national news. Instead, let's say hi to Bloomberg News Markets reporter Abigail Doolittle. Abigail, as we wrap up the week, not a lot of movement. One of the things that stands out to me, though, is the more policy-reactive two-year yield. That is down 8 basis points, 4.16. And to me, it is a reaction to the lighter-than-expected PPI report we got in contrast to yesterday's hotter-than-expected CPI. But it also highlights kind of the disconnect, I think, between the bond market participants and what we're hearing from various Fed officials.
It certainly does. And earlier there was a red head out saying investors are now pricing in 160 bips of cuts, so a little more than the 6 that had been priced in. The Fed is at 3. It's interesting that you're talking about that PPI and the bond market reaction to it yesterday. I'm pretty certain, I'm just going to pull it up right now just to make sure that I'm correct in terms of what I'm saying. We had a rally for bonds as well. In fact, we've had a rally for bonds over the last 6 days for that 2-year yield over the last week, coming in more than 20 basis points. And yesterday, John, there was something about it that almost felt like it was haven-driven as opposed to Fed-driven, because we did have the hotter-than-expected CPI, so you would have thought that investors would send yields the other direction. And then with the Bitcoin ETFs they launched initially were higher, and then there was a reversal, so some of the risk-off, risk-on mood. And now today we have this rally for bonds again, because we really have to think about it that way sometimes. Traditionally, when yields come in, that tells you that investors are looking for safety. They're looking for haven bonds. Over the last year or two, we've come to think of it so much around the Fed. But for some reason, more recently, I really do think that there's a little bit of a haven bid in there. But it is a notable move, that 2-year yield, as you mentioned, down 8 basis points. What's interesting is we also have stocks down, because when yields are down like this, typically you would have in the recent dichotomy, you would have stocks higher because it would mean liquidity is staying in the system. But this is a true risk-off day. We have stocks down, albeit not by a lot for the S&P 500, but the Russell 2000, the bank index down more than 1%, with bonds rallying as well.
And backing up, I suppose, your idea of haven bid, also the dollar higher, dollar DXY up about 0.2% right now. Let's move on to the bank earnings. Big day for the financial. Net interest income, that's the closely watched number on Wall Street, how much money is being made on lending. You have J.P. Morgan Chase, $90 billion for 2023. That's about $30 billion more than the closest competitor, Bank of America. As far as banks go, it's like almost like J.P. Morgan Chase and everybody else.
Agreed. J.P. Morgan Chase is clearly the best in breed, and it shows in the stock performance too over the last year. J.P. Morgan Chase now up about 25%. I believe Bank of America is down a little bit over the last year. Citigroup up a little bit on hopes that their turnaround plan is going to work. The other thing notable about that net interest income that you're talking about for J.P. Morgan, it was a record. And excuse me, in terms of their earnings, adjusted earnings beat by 22%. Revenues, it was a small miss. You know, you were just throwing around $90 billion as though it's 90 cents or 90 shells or 90 something. But, you know, it's interesting. Citigroup missed revenues. They missed revenues by more than $1 billion. I mean, that's such a massive miss. It's really kind of amazing. The last time I looked, that stock was up. I'm pulling it up right now. So it's up about 0.4%. It's off the highs. But it tells you there's so much hope around this turnaround plan by Jane Fraser.
All right, Bloomberg News Markets reporter Abigail Doolittle. Thanks for stopping by. Appreciate it. S&P 500 right now 2 points lower. The Dow Jones Industrial Average down 168 points. The NASDAQ Composite Index, that is down 11 points. Bloomberg Sound On with Joe Matthew. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Just 1 week to the shutdown. Is it a deal or no deal? That's the question. Welcome to the fastest show in politics. As Speaker Mike Johnson tells reporters today, he plans to stand by the spending deal that he made with Chuck Schumer, despite great pushback and, frankly, outrage by some on his right flank. We're going to talk about next steps and chances of a possible shutdown coming up with Republican Congressman Buddy Carter of Georgia. We go to the source here on Sound On. The U.S. and U.K. strike back at Houthi rebels in Yemen. We'll have a report for you straight from the Pentagon this hour. And Iowa is only 3 days off. We'll have analysis on the race from our signature panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour. And we start, as always, with a look at Wall Street. Charlie Pellet helps us with that from New York. Hey, Charlie.
Hi, thank you very much. And here's what's going on. Stocks are lower, but the S&P now little change. Down half a point, Joe, on this Friday. We are on track for a winning week for the S&P 500 index. But right now, down just half a point on the S&P. Dow Industrials down 153, a decline there of 0.4%. The NASDAQ Composite Index down 6, down less than 0.1%. NASDAQ 100 Index, full of those big tech names, also little change, down by a point right now. Russell 2000 down 0.3%. 10-year 3.97% with a 2-year 4.16%. Gold up $15 the ounce to $2,044, up by about 0.7%. West Texas Intermediate crude up 0.8%, $72.59 a barrel. While Treasury 2-year yields have hit the lowest since May as an unexpected decline in producer prices reinforce bets on Federal Reserve rate cuts this year. As for the rate cut outlook, Tony Dwyer is Chief Market Strategist at Canaccord Genuity.
I've long said that over the last 6 months that inflation's not the problem. Inflation, the trajectory is coming down pretty sharply. The issue is going to be ultimately what lower margins and lower input costs are going to mean, which is corporate earnings could have a little bit of risk near term. So I'm in the camp that the Fed is going to have to cut rates more than the market thinks.
And again, we've got the 10-year 3.97%. You can hear more of that conversation on the Surveillance podcast. Delta Airlines backing away from its 2024 profit target. That's because persistently high costs are countering gains from a rebound in international travel. And among some of the airline names today, we are looking at shares of Delta Airlines. Right now, Delta is lower by 8.6%. Tough day for this group, but United down by 10%. American down 8.8%. Southwest now lower by 4.7%. Developing story, getting word today that Boeing is being sued by passengers on an Alaska Airlines flight that was forced to make an emergency landing in Portland, Oregon last week after a midair blowout of a so-called door plug on the 737 MAX 9 jet. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Happy Friday. Welcome to the threshold of the weekend. Bloomberg Sound On the radio, satellite, and YouTube. I'm Joe Matthew in Washington, where we're counting down here, right? 3 days to Iowa, 1 week to a partial government shutdown. We'll get back to Iowa in a minute because we have news from Capitol Hill as the Speaker of the House says he is standing by the deal. Maybe we will not be shutting down next week, although how we get it all done in time is another matter. The Speaker did talk to reporters earlier, remembering the re-agreement, as we called it, between the Speaker and Chuck Schumer on top-line spending levels. Without them, we're nowhere. Here he is from a short time ago.
Our top-line agreement remains. We are getting our next steps together, and we are working toward a robust appropriations process.
All right, simple as that. Nothing to see here. Move right along. The issue, of course, is the few number of legislative days left to make this happen. And it begs the question, as we're hearing from the Senate, what about a CR? Will there be a short-term funding solution here? Because obviously, folks, as we've been hearing very loudly on the Freedom Caucus, to the speaker's right flank, if I can even put it that way, are not in favor of a CR. Bob Good, the chair of the Freedom Caucus, saying, don't fear the shutdown. And we've heard that from him before. The question is how it all might come together. Remembering the laddered CR, right? This next Friday is the first tranche, the first 4 spending bills. February 2nd, the rest of the government would shut down. And that's the big stuff like defense, which is why a lot of people are looking at that as the real date. And this is where we start our conversation with Congressman Buddy Carter, the Republican from Georgia, is with us on this Friday. And it's good to see you, Congressman. Welcome back to Bloomberg. What do you think is going to happen here? Can we get this done in time, or does a CR seem inevitable?
At this point, it does seem like a CR is inevitable. I don't see how we could get it done. Not the way the Senate operates, not the amount of time it's going to take for them to get it through their body. I just don't see that happening. And I suspect, even though the speaker has said that he does not want any more short-term CRs, I don't see any way around it short of a partial shutdown.
The idea of a CR for the rest of the fiscal year has even been floated, Congressman. Is that the world we're in, or would a little more time actually help write these 12 spending bills?
Well, I think a little more time would help. We've been out for 3 weeks with Christmas and everything, and then, but the time, a little bit of time would help. I do think we're closer than what it may appear. We got the top line number now. I know that there are some in our conference who are not happy with that top line number, but I don't know that they're not happy about the top line number as much as they are about the side deals. The side deals is what really bothers me that much, and that takes that 1.59 up to almost 1.8. I mean, it's the side deals are what really bothers me. Now, having said that, I will tell you that I think that the speaker was successful in getting some good immediate cuts in the budget, real money cuts, $10 billion in IRS, $6 billion in the COVID slush fund, clawing that back, $16 billion, and that's nothing to laugh at. That's real money. So that was good, and we also got some of the budget gimmicks that are just ridiculous. That we got rid of some of those. So there was some gain in this, and I think the speaker did the best he could do at this time with a slim majority and only one leg of the three-legged stool.
Yeah, you consider yourself an ally of the speaker, right? Because he's hearing some pretty tough talk from the Freedom Caucus. We're hearing motion to vacate again, or at least on the table. The idea that if he does what Kevin McCarthy did, he could be fired. Where do you fall on this, Representative?
Well, first of all, I thought Kevin McCarthy got a raw deal, and I was a big supporter of Kevin, and I just think that was absolutely wrong. I am a supporter of Mike Johnson's. I want him to be successful. I want him to help. I want to help him be successful, and I want to help us be successful. Look, no one wants to cut spending as much as I do. It is out of control. Let me tell you, right now, the federal government is taking in through revenue and everything else and land deals, whatever it may be, $6.4 trillion. That's $6.4 trillion that we are spending every year. That's $204,000 per second. The speed of light is 186,000 miles per second. We are spending money faster than the speed of light. That is unsustainable. We've got to stop that. We've got to stop this outrageous spending. I get it. And let's also keep in mind that those on the right, a lot of what they are concerned about is the southern border. And we need to get that southern border as part of this. This is our leverage to get real reforms done at the southern border.
Well, I'd like to hear from you on that a little bit more, because we've spent weeks, a couple months here, talking about a potential deal on the border that would be tied to the supplemental funding request for Ukraine, Israel, and Taiwan. But we have been hearing from more Republican House members that they want to see border in this spending bill. And I think Chip Roy, in fact, is the one who's saying either close the border or close the government. Do you feel that way?
Right. Well, I'd rather see us secure the border and shut down the border than I would see us shut down the government. And government shutdowns are just not good. I've been through a number of them, and you just made the comment a minute ago that it's how do you get into one? Well, it's not so much how you get into one, it's how you get out of one. It's difficult to get out of a shutdown and expensive. But at the same time, a government shutdown is not the worst thing that could happen. The worst thing that could happen would be for us not to get anything out of that southern border, not to get any kind of policy reforms, any kind of in making sure we're enforcing the laws that are on the books right now. That's one of the things that needs to be done. That's why Mayor Orcus needs to go. He needs to be impeached, and because he's not enforcing the laws that are on the book right now. But we need that. We need that at the southern border. We also need to stop this outrageous spending.
A lot of folks have suggested that the timing of a Mayorkas impeachment could kneecap this whole idea of crafting a deal on the border. It's a sentiment that even Senator Jim Lankford has expressed, the chief Republican at the table. You're on the border, on the budget committee, Congressman. How much time do you actually need? If these top line spending levels are in place,